yet. Dividend stock talk. Dividend stock talk. All right, there we go. Dividend stock talk. Here we go. My hair's a mess. Yeah, fuck it. Hey, one person over here on YouTube, one person over here on Instagram. How we doing? Nobody on Facebook yet. Dan just joined in on TikTok. So let's go, Mr. Dan, Maria, Steven, Kevin, cool, Larry, Apple user, El Pueblo. What does that say? Florida Eric, cool beans, Eric, Gary, Gary P, Connor, Grateful, James Ollie. How you doing? Wings of Wings. Interesting name. El Pablo, ¿qué pasa, amigo? ¿Cómo está? Nick Meekler. How's it going there, Mr. Nick? Gary P. Just getting ready to get started. Friday was an interesting, fun day. I'm not 100% sure exactly what I did. For those of you who don't know, this screen right here behind me is live at the moment on YouTube. Hey, Mr. Albert's here. How's it going there, Mr. Al? Rob, what's your trading strategy? Rob, my trading strategy is pretty easy. Okay? Find a good quality dividend stock, buy it, sell a covered call against it. Basically, the safest trading strategy there is. You're buying a stock, selling a covered call against it, and you're collecting a premium. And that premium, hey, Mr. Michael's over here on Facebook today. Way to go, Mike. Yeah, doing a covered call on a good quality dividend stock. You made 2% on Kohl's this week, Tuesday to Wednesday. Way to go. Nice to hear that. Very nice. All righty. So I'm looking for a safe, predictable, consistent 1% per week. It's not a whole lot that I'm looking for, and the way I find it doing over here again. All right, Doc, what are you up to? So Doc's saying hi on Instagram. Doc is saying hi on Facebook. I'm waiting for him to jump on YouTube and on TikTok to say hi. Jim Bibby. Hey, you know what, Mr. Jim? Did you get my text? Did you get my text? You're in Brockton, dude. I'm right in Marshfield. I'll be back in Marshfield in a couple of weeks. Maybe we'll go hit some sushi down Brockton Center. But I'll get that book over to you as soon as I can. Alrighty. So let's get on board and let's get started. We're going to pick up where we left off last night. Now, last night I had to quit early because my arm was really, really hurting me. I didn't take any pain pills at all yesterday. I don't like pain pills. They're just like waste of time in my humble opinion. All right, so we're going to start off with where we left off last night. First on the list is going to be Whirlpool, WHR. Now, we all heard of Whirlpool. We've seen the commercials. Okay, that lonely Whirlpool salesman, WHR. There you go, Whirlpool Corporation. Now, currently, as always, I always start off with the very first thing I want to look at is what can I, as an investor, buy it for first thing in the morning. First thing in the morning is going to be Monday morning. So the first thing I'm going to do is buy at 93.12. The 93 is going for $1.45. If I subtract that 12 cents off there, I'm still way over 1%. Okay? Way over 1%. And it's Whirlpool. Tell me, how many of you have never heard of Whirlpool? What the heck? We were at 100 a couple minutes ago. Now we're down to 61. Oh, well, it is what it is. All right, let's do it. Okay, so Whirlpool. The last trade was 93.03. Now, today was Friday, the last trading day of the week. We got the weekend we're looking forward to. So what is the last trade of the day of this week? 93.03. Okay, so Monday, bid 92.60, ask 93.12. So if I buy it at 93, I sell somebody. I don't know if you guys understand this. If I'm buying it at 93 and I'm selling it at 93 and I'm grabbing $1.45 just to hold on to it for 5 days, my only concern is it going to be above 93 come Friday? That's it. I got 4 days, 5 days. Ricardo Suarez, ¿qué pasa, amigo? ¿Cómo está? Hey, Doc. Doc, you say, I'm going to come up with a few more social media sites, Doc, and see if you can keep up with me. Plus 700 this week, Jenks. Hey, Lex. Cool beans. Glad you made some money this week, Lex. Way to go. Now, some of you people think there's so many different trading strategies out there. What makes this one so much better than any other one? Well, I didn't say it was better. I just said this is the one that I use. Okay, there are other ones that are better than this. This one is safe, predictable, consistent, and there's no way to lose if you do it right. Okay, it was created for my 9-year-old daughter back in 2008. It had to be simple. It had to be safe, had to be predictable, consistent, no way she could lose. That's the 5 criteria that I had to create a trading strategy for a 9-year-old. Wade, how's it going? Super 30 just joined. Way to go. I don't know how we lived without Super 30 being here. Way to go, dude. Are we talking options? Yes, we are, brother. We're talking options. Now, we're talking one of the safest strategies there are, and it's called a covered call, where I buy a stock, and then I sell somebody the rights to buy it from me for the exact same price I just paid for it. That's nuts. If I'm going to buy Whirlpool at 93, I'm going to sell it to somebody else at 93. I'm going to grab 145, and 145 is more than 1% for the week. That's safe, predictable, consistent 1% per week. Now, if you add that up, that's over 100% per year. Which is the best stock to invest in now? All right, nowhere. I can't answer that question for you. I have no idea who you are. I have no idea what your risk factor is. I have no idea what your goals are. Okay, I don't know anything about you. I can't tell you what is the best stock to invest in. All I can do is tell you what I'm investing in. And that's all I'm doing here. As I'm telling you what I'm doing, and I'm not really telling you what you should do, because you got to figure that out yourself. I'm an advisor. You want me to be here? Yeah, be my guest. You know, I'm always looking for other people's opinion. Okay, and what I'm saying correct? Or is it not correct? Are you also knowledgeable in Forex? Yes, I am, but I don't do Forex here. Okay, this channel is dedicated to one of the safest trading strategies there is, and it's called a covered call. You can do it in an IRA. Some trading strategies you cannot do in an IRA. I promise it won't be annoying. Okay, that's fine. I like how it takes the idea of when to sell out of the question. No emotions like day trading. Lex, this is so simple. Okay. This is for Lex and for Super 30. Okay. Now, I created this trading strategy for my 9-year-old daughter. Now, you guys are new here, so I'm going to show you this. Now, some of you guys have already seen it, but bear with me. First of all, the screen behind me, this is live on YouTube. Okay, you can come up to the bio. There's a link there, the10minutetrader.com on YouTube. There's 2 lives on YouTube at the moment. We're going to slide down a little bit. We're going to go over to YouTube really quick because I want to show you guys this. That way, way too bright. Yeah, sorry about that. The oldest. We're going to my oldest videos. Now you see some of these videos here. Look at this. 11 years ago. Okay, this video was shot 11 years ago.
Thingy, which my dad doesn't like me calling it that, but I do. Hi, I'm JC, and being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
All right, well, that's the little princess that I created this for. Here's where she was 11. Now, I created this for her when she was 9, but we didn't have, yes, that is my daughter, we didn't have access to be able to upload to YouTube 11 years ago, 12 years ago. Okay, so this was 11 years ago when we first got what do you call it? Approval to do videos. All right, well, here's me. I had a little bit more here.
Dividends. Yay! Anyway, no.
Yeah. I know I was a little silly, but that was 11 years. 11 years ago, you'll hear me saying the exact same things over.
But you want to bump it up a little bit? Let's do 2 trades a month. 20 days. 20 days in the month of January. You can do 2. 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 24 for the whole year. And if you get at least 2%, that's close to 50% a year. 50% per year. That's cool.
That was 11 years ago. I was getting 50% per year 11 years ago. Actually, longer than that, but this was like one of the first videos I was actually able to upload. Just to show you that I have been around and I have been doing this for quite a while. Okay, whoops, not that one. That one. Okay. The main objective, it had to be simple. It had to be safe. It had to be predictable. It had to be consistent. And there was no way that she could possibly lose. So in order for that to happen, all right, I don't know you, Judd. I don't invite people to jump on board unless I know who you are. Okay, unless you DM me with your phone number, I'll give you a call. We can talk. If you can contribute to the the ambiance of the live show, fine. If not, I don't want to talk about Amway. I don't want to talk about NASCAR. I don't want to talk politics. I don't want to talk religion. I want to talk investing in dividend stocks for weekly cash flow. That's it. Okay. Just too bright to look at the screen. Yeah, sorry about that. All right. So anyway, what was I saying? When she was 9, oh, look at this. We got some people. We have quite a bit of people here tonight. Just rolling on in. Cool beans. Okay, so it had to be simple. Remember, she was 9 years old. Okay, she asked, hey, Daddy, can I do what you're doing? I said, oh, okay, well, it had to be simple, safe, predictable, consistent, and no way to lose. Okay, great. So how do I do that? Well, number 1, never buy something you do not want to hold. What do I mean by that? Well, if you don't understand the company, if you don't know what the company does, if you don't know the ins and outs, the profit margins, how much money they make, how much money, what is the consistency of the increase of dividends, what is the annual profit margins. If you don't know the fundamentals of a company and you don't understand it, well, don't buy it. Number 1, never buy something you do not want to hold long term. That's rule number 1. It's a simple rule. Rule number 2, never sell at a loss. Very, very rarely you ever see me selling something at a loss. I just don't do it. Okay, it defeats the purpose. Rule number 3, make sure the company has a minimum of 20 years of increased dividends. Why? Why 20 years of increased dividends? Well, if you take a look at a stock chart, like the one behind me, stocks go up, they come down. They 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 go up, they come down. That's all they do. Which platform do you use for investing? All right, Super 30, this is Think or Swim with Charles Schwab. Okay, so far, good advice. Very rare to find for TikTok. Hey, I'm an acquired taste from what I understand. Okay, so far, as I was saying, stocks only go up and they only go down. So why do I want a company that has 20 years of increased dividends? Well, when the stock goes down, because that's all they do. They go up, they go down. They don't come to your house. They don't make your bed. They don't put little candies on your pillow. Okay? They don't wash your car. They don't do your dishes. They don't even vacuum the lawn. They don't even do the laundry. Camilla, hi. What's your thoughts on Solano? All right, Solano, you really got to give me the ticker symbol. Because if I look at a company and I don't know who they are, well, there's a reason why I don't know who they are. Okay, if this company, Solano, has not increased its dividends for 20 consecutive years, I would have no idea. Okay, but I'll take a look at it for you and I'll give you my opinion. But if you said something that I knew and that I know is a good company, yeah, I'd know the stock symbol right off the top of my head. Old dog, hey, James, great strategy for consistent income. You've been here for a while, dude. You know that. Sage, is Kohl's still a good stock? All right, I'm going to write Kohl's down on the list. We will take a look at it this evening. All right. I wrote Kohl's down. Okay. It's written down. We will take a look at it. All right. So just sit and chill. How do you see Zacks ranking for stocks? Wow, nowhere. I have no clue who Zacks is. Totally awesome. Do you know what I mean? If I have never heard of, now I've been doing this for over 20 years, okay? So when you tell me a stock, when you tell me a company, either I will know who it is because it is a good company, or I won't know who it is because they don't have 20 years of increased dividends and they don't have weekly options. Okay, so I didn't finish with my list, did I? Never buy something you don't want to hold, never sell at a loss, make sure it has 20 years of increased dividends because in case when the stock goes down, at least you're reassured that you're getting higher and higher dividends every single year. I know where, yes, I'm aware that Kohl's was down 22% yesterday, but we're going to, excuse me, we're going to be talking about that in a little minute, in a few minutes, so just sit tight, and I will get to Kohl's this evening. I'm here from 9 o'clock until 11:30. Okay, so we have plenty of time to go over Kohl's. Sit tight. A lot of people like to sit in front of their big screen TV because with this being on YouTube, you can watch this on your big screen TV or you can watch it on your computer because I'm pretty sure on your phone you cannot see these little tiny numbers. If you're on a phone or a tablet, you're not going to read these tiny numbers. And if you don't read these tiny numbers, you're not going to really understand what's going on because here's the last price of the day. Here's the bid, here's the ask, here's the volume, here's the open, here's the high, and here's the low. It tells me everything about the stock for today. So if I'm going to buy it, I'm going to buy it at 93.12 first thing Monday morning. Okay, and if I'm buying it at 93.12 first thing Monday morning, I don't want to hold on to it for a long period of time. Yeah, they might have a dividend coming up, and I might be able to collect the dividend. But what I want is I want to collect the premium. Because what is nice about the premium? The premium is kind of like an insurance policy. You know how like you pay your insurance policy on your car or on your house, and sometimes you just don't use it? Well, here I am collecting the premium. $1.45 is way more than 1%. And that's all I'm looking for is 1% per week. Crazy moves today. Yay, Mikey G, how you doing? Doc, MPW. Okay, come on, Doc. You can't say hi, hello. You just got to hit me with all these stocks you want to take a look at. All right, MPW, AEO, ALB. Now, I let Doc get away with this because Doc is my concierge doctor. WYN. MO's Altria. And Dell. Ooh, Dell. Okay, somebody just said something about income. Super 30, you're absolutely right. Hi and hello. Yeah, after the fact. Yeah, piece of turd. Anyway, everybody got to give Doc a hard time every once in a while. Okay, so Super 30, you're talking about income. You're absolutely 100% correct. You know why? I'm 60 years old. I'm retired, okay? I got to live off my income. I do. Now, to be 100% honest with you, I do not have millions upon millions of dollars. No, I don't. Okay, I only got 6 figures. That's it. See, that has got to pay for my bills on a weekly basis. That's why rule number 1, never buy something you don't want to hold. Okay, because you might have to. Rule number 2, never sell for a loss. Rule number 3, make sure it has 20 years of increased dividends. Rule number 4, weekly options. Very important, weekly options, because I want a consistent weekly cash flow. I do not do monthlies. I don't. You look at all these ETFs, you look at all these good stocks. There's a lot of good stocks out there that have only monthlies available. But the numbers on the monthlies just don't work. They don't. And we're going to get into it a little bit because someone's going to ask me something about a monthly. Well, I'll pull it up, I'll check out the numbers, and I'll show you why I don't do monthlies. Super Z, you're not going to sell us an IUL. You know, Super 30, you and I really got to talk. Okay, you don't like IULs, and you're missing something. And no, I'm not going to sell you an IUL. Okay, I cater to traders. All right. So Super 30, no, I'm not going to sell you anything. I don't sell. Oh, as a matter of fact, before I forget, there are 22. Last time I counted, I think it was like 2 weeks ago, 22 people pretending to be me, which I think is cool as shit. You know, I think it's such a compliment. They actually go to my website, steal my videos, put it up on their own site, claiming to be me. Okay, so If you get an email, if you get a DM, if you get a text from someone pretending to be me, telling you to go to WhatsApp, telling you to go to Telegram, telling you to send money to them because they get a really cool deal on a cryptocurrency, yeah, that ain't me. I don't do crypto, I don't do Telegram, and I don't do WhatsApp. Okay? You want to talk to me, send me your phone number. I will call you. All right, Super 8. No, I'm not going to sell you an IUL. I like VULs better. There's a difference between an IUL and a VUL. Okay, see now, at one point in time, okay, just to let you know, at one point in time, I am creating my own fund. Okay, once I create the own fund, it's going to be what's called an IDF, an insurance dedicated fund, so that I can get an IUL. I can put my money into an IUL, but the cash value will go into a stock, into a fund in which I control. So if I'm getting 50% per year on my own fund, and I am controlling the fund, and the money in my IUL is in the fund that I control, that's getting 50% tax-free year after year. Yeah, I'm all for it. Okay, and I borrow the money off of that, and then I get another 50 to 60% a year on that money. So you're talking about taking some amount of money and doubling it every year. Okay, yeah, but I don't want to talk about that. Hey, Calvin Hill is watching also. Calvin Hill always watches. Okay, now Calvin Hill has more spammers than I do. He's been on longer and he has a lot bigger crowd. Okay, I bought Dell stock today when it was 21% down. All right, we're going to take a look at Dell because it's on the list. All right, so I told you I gave you all the what do you call those thingies? The rules, regulations, warnings. What do they call those? The fine print. Yeah, because I'm not a financial advisor. I'm not a stockbroker. Disclaimers. Thanks, Doc. All the disclaimers. I am basically guidelines. Good. Disclosures. Great. Yeah, I am basically nobody. I am a nobody. I didn't even go to college, but I do know how to read a chart and I do know how to read numbers. Okay, I can get you a third grader says, oh yeah, that's 93.13, 93.12. Okay, the strike price up the 93, 145. I can get you a third grader to tell you that. I'm just pointing out the numbers and I'm just showing you how I interpret the charts. I do suggest you all do your own research. Just because I say something doesn't mean it's true. Okay, your best bet is to take a look. Hey, Kathy Jensenary. I think that it. Did I say that right? Yeah, baby. Okay, sorry. I got people over here. Now, for those who don't know, I do have 5 cameras going at once. YouTube, Instagram, Facebook, and another YouTube. Okay. This is the only one that is live on YouTube. Well, the other YouTube one has actually what you're seeing now, me in front of the camera. Kathy, how you doing over there? Okay, so, yeah, the one on YouTube has just this, just the screen alone. Okay, the other YouTube one is basically the same thing as this because I have different audiences. And I will eventually have 6 or 8 cameras because I don't trust anybody. I don't. If I knew how to use the software that I have in my computer, I wouldn't need all the cameras. But I have no idea how to use it. Okay, so let's get back to where we were. We went through the disclosures. I'm a nobody. Anything you think you might want to do some research on it, I suggest you do. Okay, I'm just looking at stocks that have a consistent increase in their dividends. Why? Because when the stock goes down, I want to be reassured that I'm consistently bringing in money. And I want each and every one to have weekly options. Why? Well, because I like weekly cash flow. Okay, monthly options give you monthly cash flow. The numbers just don't work. They don't. We're going to get to that a little bit later. El Pablo, how do we find the YouTube channel? Oh, good question. Right up here, top left corner, we see my smiling little face right there. It says dividends, stock talk, whatever. Yeah, you click on that. That will bring you to the 10-Minute Trader, which is my website. Okay, which is right here. Okay, the 10-Minute Trader. Okay, from there, you just slide down a little bit. There's one video tells you basically the same thing you're hearing now. Okay, then this is my no risk trading explained. What do I mean by no risk? Well, I really can't picture Coca-Cola going out of business. They've been doing it for over 100 years. I'm pretty sure they're going to continue doing it for the next 10, 20 years. Okay, underneath that is the link to my live trading, because I actually have a group of people that get together through a Zoom call every morning. We do live trading. Underneath that, you'll see social media. Okay, YouTube, Twitter, Facebook, Instagram, podcast, LinkedIn, Patreon, TikTok, books by James. I've written 13 books so far. My newest book will be available pretty soon. And then underneath that, you will see all my trades for this year. Okay, for this year, first quarter and second quarter. Okay, here we go. Here, week number 1. You'll see there's 2 accounts. Okay, count here, count here. One is all cash, one is margin. Why? Well, I suggest you don't do a margin account until you understand what the risks are. Because there are risks to a margin account, and it's borrowed money. Okay, so I am trading my own money and borrowed money. Very risky. Do not do this until you understand the risks. Over here, just plain cash account. We all understand what a cash account is. You know, you put cash up and then you trade it. Yeah, 2.1%, 1.3. All the percentages are there for what I made. But every single week is there, except for this week. I haven't put it up yet because options don't expire until Saturday. So after Saturday, then I'll put up this week's. Then they'll give me the realistic numbers. All right, back to, here we go. All right, so we're still looking at Whirlpool. Okay, so we got all the disclaimers out of the way, all the information you need to know. So all that's out of the way. Old dog, do you have any room available in your Patreon daily Zoom call? Yes, we do. Oh, and by the way, I am going to cap it off because I don't want too many. I want to have enough that I can, everybody has a chance to be able to get in and ask questions. Because the first half of the podcast, the first half of the Zoom call is me doing the podcast. Let me quickly go over this, go back to this for a second. All right, see, I'm going to open up the podcast. Same thing, Dividend Stock Talk podcast. Okay, there's over 900 entries. Okay, every single trading day, you'll see an entry. Well, let's hear one just for the fun of it.
Good morning, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow.
That sounds
Take
so
you along for the
boring.
ride.
I really
so
got to pep it up a
you
little
can
bit.
get that safe, secure, predictable, consistent 1%.
I know, it's boring. But you know what? It is what it is. I do it every single day, only to set kind of, let's call it a foundation for my children and my grandchildren, because eventually they are going to inherit this business. My grandson's only 4 years old, got a long way to go. The AM Zoom calls are very helpful. Well, I'm glad you like it. All right, yeah, so the first half is the podcast, okay, where I actually trade the 2 accounts. Now, you see me sharing 2 accounts. I have 6. I only share 2 with you guys, okay? The same strategy, safe, predictable, consistent, 1% per week. That's my goal, my focus. So you see that on the 2 accounts first thing in the morning. After that, it's open questions. You can ask me any single question you want. You can even share your screen and I can see exactly what you're doing and give you my opinion. I can't tell you what to do. All right, I should say I'm not going to tell you what to do. Okay, because my firm belief is we all have to take accountability for our own actions. It's your money. Nobody has more interest in your money than you do. Okay, I will point out to you, and I will give you the options. Okay, if you ask my opinion, this is my opinion. Okay, it's not a recommendation. I don't recommend anything. I do recommend you do your own work and you take accountability for your own, for your own actions. That's besides the point. Okay, let's get back to Whirlpool. It's the first one of the night. Let's get moving and see what Whirlpool looks like. Now, very first thing I always look at. We already said the numbers. Now, the numbers work. So remember the list. Never buy something you don't want to hold. Never settle at a loss. Make sure it has 20 years of increased dividends, weekly options, and then number 5, most importantly, make sure the numbers work. What does that mean? Well, what can I buy it for? What can I sell it for? Okay, it's over 1%. Great. Now I want to look at the chart. I want to look at 4 different charts. I want to look at the 1-year chart, the 90-day chart, the 30-day chart, and then the seasonality. Why? I want to have an idea where the stock is, where it was, and where it's going to go most likely. Odds and probabilities. Is it guaranteed? No, it's not guaranteed, but it's pretty damn close. I tried something new. I sold a 16 5 put on Kohl's at its low, made 1.79 in 2 days. Albert, that's awesome. That's cash secured put. I love cash secured puts. I don't teach them here. And the reason why I don't teach them here is because my daughter was 9 years old. Trying to throw that in there, yeah, a little bit too much information. Okay, Doc, you are offering the perfect business. No boss, no employees, no customers, no inventory, and no location. I like that. No boss, no employees, no customers, no inventory, and no location. As long as I can get an internet connection, I can trade anywhere. And if you guys have been following me long enough and you've seen some of my videos, you'll see me posting videos from the beach. You see me posting videos, in front of Kohl's, at the grocery store. I do videos anywhere I get the, the inspiration. Okay? All right, so anyway, let's get back to looking at Whirlpool, WHR. Okay, so first off, I'm really going to try not to use this arm, so I'm going to be doing a lot of moving around. First thing I want to look at when I look at a chart, the 1 year chart, very first thing, high, low, where was it? Where is it? Very first thing. So where was it? Okay, the high, all right, a year ago, we were at 130.24. The high is 159.97, and that was the middle of July. From there, the bottom was a couple of days ago at 84.67. That excites me. Why does that excite me for the bottom of the year? Because everybody wants to pick a top and everybody wants to pick the bottom. Okay? But it's very hard to pick the top and pick the bottom because it's moving. You're throwing a dart at a dartboard on a moving train while you're on a horseback. Where did I get that from? I got that from Star Trek. Remember that? You're trying to shoot a target on a moving train while you're sitting on a horse, blindfolded. I think that was what he said. Anyway, so we see the high, we see the low, we see where it was, we see where it is. Okay? Now, let's jump into 90 days. 90 days ago, which would be March 1st. Okay? Here we go. And 90 days ago, first thing I want to see, again, where's the high? Where's the low? Where was it? Where is it? It takes not even 2 or 3 seconds to see the high, the low. Where was it? Where is it? I love that it's bouncing off of this bottom right here. We're going to take a really close look at that and then give you my opinion of that. Okay, so 90 days ago, 107.16, topped out the beginning of April at 120.39. From there, she drops and drops and drops. I want to zoom into the last 30 days. 30 days ago, we opened up at 94.60. It took about a week and a half to find the 30-day high. Here it is, 30-day high on the 14th. From there, let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days to the downside to find the new 30-day bottom. 2 days to the upside. I love 2 days to the upside after a 30-day bottom. You got a 30-day top, 30-day bottom, 2 days to the upside. Freaking awesome. That's my cue to jump in. Because 1 day to the upside doesn't really cut it. But look where this one is. Okay, almost at 84, and it's at 90, almost at 99. Okay, we're at 93. Not a whole heck of a lot of space to go to challenge that 30-day high. But I'm not looking for a whole bunch. I'm looking for just 1%. I'm looking to buy it at 93, okay, 93.12 to be exact. Sell somebody the rights to buy it from me at 93, collect 145. We're going to go for the ROI in just a second. But right now, it's at 93.03. It's already above 93. So what has to happen? Stocks go up, I make money. Stock stays the exact same place, I still make money. Okay? Now, because stocks only go 3 different directions. Either go up, stay the exact same, or go down. So I got 2 out of 3. What was that, Meatloaf? Because 2 out of 3 ain't bad. Yeah, remember that? 2 out of 3 ain't bad. Okay, if she goes up, I make my money. Stays exactly where she is, I make my money. Okay? But where is she? 30-day top, 30-day bottom, she's going to the upside. That's what stocks do. It gets too high, people start taking their profits. It gets too low, okay, we the investors say, that's too damn low for this stock. So let's jump in and buy some. So that's what's happening. Big jump yesterday. That was pretty big. I mean, compared to the last 30 days, there's not another day in the last 30 days that comes close to the opening and the close of yesterday. Even today was pretty big. Okay, so that being said, let's take a look at seasonality. What is seasonality? Well, seasonality is how does a stock normally react during the time of year. Okay, so the chart we're looking at now is January 1st to December 31st. Okay, the blue line represents the movement for this year. Okay, this is the movement for this year, this blue line. The red line is the average movement over a 10-year period, 2014, 2015, 2016, 2017, so on and so forth. 10 years worth of data all on top of one another. So what do I want to do? I want to take a look at this little spot right here, because that's the next 2 weeks. Okay? Historically, how does the stock normally move this time of year? Hey, 2 more people over here on Instagram. Hey, you guys over there on Instagram, how you guys doing? Feng Feng, that's an interesting name, cool beans. And Marcelli Travel, cool. All right, so I want to take a look at the next 2 weeks. Historically speaking, what does the stock normally do? Well, that's pretty plain to see, okay? Not huge, but it's an upward trend. Okay, so we're here on the 1st. Okay, the 7th is right over here. Okay, that's to the upside for the next week. So historically, the stock goes up, right? So if the stock goes up historically, and we're currently in a rebound of a 30-day bottom, okay? So you have the current trend going to the upside, and you have historical trend going to the upside, and we have 93.12, and I sell it at 93 for 145. Okay, so here's where comes the math. You ready? Bring up my calculator. All right, so if I'm buying it for 93.12 and I'm selling it for 93, I'm losing 12 cents right off the top. Okay, so I'm losing 12 cents off the top. But here's the thing. I'm collecting 145. See the 145 right there? I'm collecting the 145, so I get to deduct that 12 cents right off that 135. That 145, sorry. So 145 minus 12 is 133. So that's my profit, 133. Okay? Do we all see how that works? Okay? I'm buying it for 93.12. I'm selling it for 93. I'm losing 12 cents right off the top. Okay? Take the 12 cents off of my profit of 145. So my actual profit's 133. Okay, so what's my rate of return? To get the rate of return, you divide it by the purchase price, 93. Not 93.12 because I already subtracted the 12 cents out of the equation. Okay, divided by the 93 comes to a grand total of 1.43% for the week. Okay, so we're talking Whirlpool. Okay, we all know who Whirlpool is. I mean, you have to be over the age of 18. If you're over the age of 18, you've used a refrigerator, a microwave, a washer, a dryer, or some other kind of appliance that Whirlpool makes. Okay, Whirlpool's been around for decades. Hey, Jerry, you made 4.5% this week. Nice going, Jerry. All right, good for you. All right, so that's where we are. Whirlpool. I like Whirlpool. Numbers look right. As a matter of fact, I like Whirlpool so much because I'm going to write it down and circle it for next week. Yep. WHR. Circle. That's the first one for next week. I like that one. All right. Now, what is next on the list? UPS. Okay, so these are the list. This is the leftover from last night. Last night I had to cut out early because my shoulder was really really bothering me. UPS. The ups dudes. Okay, first thing I want to look at is UPS. Okay, we all know this. First thing I want to look at is what's the number? 139. The 139s are going for 156. Now, if you need to know what 1% is, take a look at the purchase price. Okay, 139.00. Okay, take the point. You know, that point, you move it over 2 places to the left. $1.39 is 1% of 139. That's simple. What am I collecting on the 139? 156. That's over 1%. Okay, so it made that number. Now I want to check the chart. All right, so the chart, 86, how you doing? Will you still enter Whirlpool if the dividend has passed? That's a good question. When is the dividend? Now, for those of you that are new here, okay, you don't know this, but before WHR, 16th of May. Oh, yeah. Yeah, so we probably won't be doing Whirlpool. Okay. Now, what do I mean by that? Well, here's the dividend right here. Now, why do I call this channel Dividends for Weekly Cash Flow? Well, I call it Dividends for Weekly Cash Flow is because I find out where the dividend is. Stocks have a tendency to move up just before the dividend is paid. Okay, so if stocks move up just before the dividend is paid, I want to get in 2 weeks before the dividend, which if it was in the 16th of May, I want to get it on the 29th of April. Okay, so just for the fun of it, let's go to the 29th of April and see what Whirlpool did on the 29th of April. WHR, 29th of April, correct? I want to go over one. All right, so this is what we're looking at on the what do you call it, the 28th of April. Okay, so I like to see the chart. What does it look like before I jump in? All right, well, here's your 30-day high, here's your 30-day bottom. Okay, I probably wouldn't have bought it because look at this is the 26th, this is a Friday. The 29th is a Monday. Okay, so in retrospect, yeah, I could say I'd buy it, but no, I wouldn't because look, here's your 30-day high, here's your 30-day bottom. Remember, I said I like 2 days to the upside before I jump in. Okay, so if I like to get it 2 weeks before, I'm talking about the week of the 29th. What is the week of the 29th? Let's go back right there. Okay, so the 29th, the 30th, the 1st, 2nd, or 3rd. I want to buy it in this week right here. That's 2 weeks before the dividend is paid. So let's go back to the chart and see what it says. Okay, so here's the 28th, not the 28th, what is it? The 26th, which is the Friday. So the very next trading day is going to be Monday, the 29th. Okay, so let's move one day. Okay, look, Monday's an up day. Would I jump on it then? No, I wouldn't. I like 2 days to the upside. That's just me. Okay, go one more day. See, I wouldn't have jumped in. One more day. Nope. Nope. There's 1 day to the upside. That you can't really count. Yeah, so I probably wouldn't have jumped into Whirlpool this quarter because even though the numbers worked, the chart is not telling me. See, here's the 30-day bottom coming off of this 30-day top right here. I like 2 days to the upside. There isn't. It's just going sideways, flat, not going anywhere. So no, I wouldn't have bought it this year. Okay, keep going a little further. 2 days to the upside. Yeah, see, kind of glad I didn't. But, you know, I can't go back and I don't cherry pick. Okay, so I don't know if some of you guys know what cherry picking is. Okay, I take a look at the numbers. And I'm strictly a numbers person. If your second update is a Tuesday, all right, if your second update, okay, your second up day, not update. Second up day is a Tuesday or a Wednesday. Would you still buy it on a Wednesday or Thursday? Doc, you know better than anyone else because I say this to you almost every time we have a conversation. It's all about the numbers. It's all about the numbers. Okay? If the second day is up, okay, second day to the upside, okay, and the numbers work, and I have the money available, because usually all my money's gone by Monday or Tuesday. For you guys don't know, 98% of my money is invested at all times. I actually have a credit card and a debit card attached to my trading account. Anytime I have a bill, I just go into my trading account, sell something, release some funds, and then pay my bills. Okay? I don't have any money sitting in a bank just doing nothing. Well, I do, but it's, you know, less than $1,000. 86. It's good you have multiple parameters for it to qualify. I do, because you know, and I don't want to sound arrogant or anything, but it's my money, and I want to make sure I get a safe, predictable, consistent 1% per week. Okay, I don't want to sound arrogant because I love Whirlpool, really, I do. But at this moment in time, the numbers just didn't work. Okay, well, it's good risk management. 86. Thank you very much. All right, so let's get back to where we were. That was Whirlpool. We're done with Whirlpool. We're on UPS at the moment. UPS. Wow. 139 to 139. Yes. Let's take a look at the chart. Okay, let's get this thing over to this direction. Very first thing. Always, always, always. Very first thing. Where's the high? Where's the low? Where was it? Where is it? Normally, when I see it down here like this, I'll say no, because it's the bottom. But take a close look. The last 2 days are to the upside. I love a bottom. That's almost the bottom of the year. The bottom of the year. That's like an awesome time to get in. When do you want to buy? Well, you want to buy it at the bottom. Where the hell's the bottom? Well, the bottom at this moment in time, right here, 2 days to the upside. I love 2 days to the upside, especially coming off of a bottom. So let's take a closer look. Okay, high, low, where was it? Where is it? Takes 2 or 3 seconds to point that out. So what are those numbers? A year ago today, UPS is at 167.85, topped out in the end of July at 193.11. Okay, bottomed out. We got a double bottom. Okay, 133.58. Hit it the end of October, and then hit it again the other day. Great. Let's take a look at the last 90 days. What has it done for the last 3 months? Last 3 months, first thing I want to look at. High, double high, and there's the low. Okay, where was it? Where is it? Everything looks good. So let's go to the next one. But first, let's see the numbers. All right, numbers. 90 days ago, opened up at 148.84. Now we got a double high at 154.72. Happened once middle of March, and then happened again at the end of March. Okay, from there, the bottom, again, was a couple of days ago. Let's look at the last 30 days. 30 days ago, right there. Okay, so 30 days ago, again, let's take a look. The 30-day high, 30-day bottom. I love it when 30-day top bounces off of a 30-day bottom, 2 days to the upside. Freaking awesome. Yeah. Holy shit, we're at 32. All right, we're going to reboot in a couple of seconds. After we do this, we'll reboot. See if we can get more people here. You know, like, share, subscribe, all that kind of nice, neat, fun stuff. That's what you guys are supposed to be doing, keeping the numbers up. All right, so 30 days ago, we're at opened up at 147.54. Okay, we topped out in the middle of May, and that was 153.42. From there, she drops all the way down to the 30-day bottom. 30-day bottom, 133.58. Remember, I'm looking at buying this one at 139. Okay, 2 days to the upside. See that? Let's zoom in a little bit closer. Okay, here's the bottom here. Okay, right there. 1 up day, 2 up days, 138. I like it. And let's take a quick look at seasonality. See what this thing normally does. Mamas, I'm ready to jump in. I sent you a message. Call me. Mamas, I will give you a call. Do you want me to call you tonight or tomorrow morning? Either way works for me. That's right, you did send me a number. I forgot to call you today. All right, Al, don't put your number on here. All right, I don't have the area code. And please don't try to be from, what do you call that, Canada? So we do have a bunch of people from Canada. They send me their phone numbers. I can't call Canada. 8675309. That's funny. VLO. VLO, I called VLO yesterday. Coles did well today. Okay, VLO. Let's write that one down. VLO. All right, so we have VLO. Actually, VLO is coming out right after Disney, which is next. All right, so seasonality is what we want to take a look at. What does UPS usually do this time of year? Okay. Basically, here we go. Yeah, it doesn't look hugely favorable, but From here, we're going to go sideways for the first week. Okay, so here we are right here. Sideways for the first week. And I'm sorry that I'm out of the picture. It's just I don't want to lift my right arm. For those of you who don't know, I did break my collarbone recently, so it's still healing. Okay, so it's going sideways for about a week. We're going to dip a little bit, but then come back up. Because look at the dates. Okay, next Friday is going to be the 7th. The Friday after that's going to be the 14th. So basically, it's just going to go sideways for the next 2 weeks. EX date for VLO was the 30th. Ooh, so we missed that one. Whoever called Coles yesterday, great call. Well, Richie Rich, I'd like to take credit for it because I'm kind of the one here pointing everything out. But you know what? I don't tell people what to buy. Really, I don't. And I don't know who called for Coles yesterday. Okay, so people don't tell me who they are. Okay, so I like UPS. Numbers look good. Nice time to jump in. And I think I'll write that down also. UPS. Okay. Because anytime I see a stock that looks like this, the 30-day bottom jumping off for 2 days, and at the upside and the numbers work, just saying it was nice. Well, thank you very much, Mr. Richie Rich. All right, so let's quickly reboot. You guys don't go anywhere. We're trying to get a little bit more than 30 people here. It is a Friday night. Not much happens on a Friday night. All right. So for those of you guys that are here still on linked, what was it? YouTube. Yeah. All right. So hi, I'm James from Dividend Stock Talk, brought to you by 10 Minute Trader, where I invest in dividend stocks for weekly cash flow. My goal is a safe, predictable, consistent 1% per week. Yeehaw! Craig's here first. Mr. Craig. Oh, Chris is here. Chris beat you to it, Craig. All right. Coco's here. Way to go, Coco. PM. All righty. Is that Bob? Bob's here. Mark. Boca. How's the guys going? Ken. Let's see if we can get more than what do you think of KSS after earnings and dividends coming up? All right, Fang, we're going to take a look at that very shortly because Coles is on the list for us to take a look at this afternoon or this evening. Oh, got a couple of highs there. How you guys doing? Alexander Perkins, Lamont Woody, Lamont. Is that Lamont Cranston? Who here knows who Lamont Cranston is? I can bet nobody knows who Lamont Cranston is. Rick Harden, OVO, USA 1234. Joe sells corporate Christie Homes. Cool beans, Joe. I'm going to take the wild guess saying, is that Joe or Jose? Yeah, Joe. I'll take a wild guess that you're in Texas. Wild guess. Sage, watching on YouTube. Cool beans. I caught the Coles drop. We're going to take a look at Coles in a little bit. All right, see, we're up at 76. That's better than 30. All right, so let's continue. That was UPS. Next on the list is going to be Disney. Now, Disney, as I recall, used to be, now correct me if I'm wrong, used to be a 1-year dividend payer. They pay the dividend once per year. So I don't know if it's still true. EIS. As a matter of fact, let's go quickly check. I don't want that. I want this. Okay, and I'm going to put Disney in here. DIS. Okay, now for those of you who don't know, this behind me, this screen is live on YouTube. Okay, this is Yahoo Finance. So I'm looking at Yahoo Finance to find out the details. Okay, December, twice a year. Okay, so Disney pays twice a year, July and December. Okay. They've been paying for quite a while, since 1997, 4, 5, 21, 24, 27, 35, 40, 60, 75, 86, 115. Then they dropped in 2014, 66, 71, 78, 84, 88. And then it dropped again. What happened last year? They didn't pay in July of last year. Wait a second. They didn't pay in 2020, 2021, or 2022. So I'm going to say no to Disney because the consistency with the dividends is not what I want it to be, personally. Okay, so if you like Disney, hey, more power to you. I'll read the numbers to you. That's about it. Okay, 104 is the ask price. The 104 is going for 101. It's not even making 1% on the premium. So the premium's not 1%, so that's a no. The dividends are not consistent, and they missed a couple of years. So no to Disney. Sorry for you Disney lovers. VLO is next. VLO 158.82. The 150. I hate when the math gets a little complicated. Most of the time I can do it in my head. But the price, 158.82. The closest one they got is the 157.50. But the 157.50, I'm losing $1.32. So you take $1.32 off of that, and I'm making 112. Yeah. Sorry, VLO is going to be a no. Sorry about that. CVS. 59.60. 59.60. The ask is 59.57. So that's going to be 59. Take 50 cents off of that. I'm still making over 1% there. The 60s making over 1% there. I'm making just 1%. All right, so a little over 1% on the 59, and the 60 is just at 1%. So I'd go for the 59. Why? Well, take a look. 59.57, you're already 50 cents into the money. The stock doesn't have to go anywhere. If it goes up, you make your money. If it stays the exact same, you make money. The stock can even come down. If I'm buying it at 59.57 and I'm selling the 59s, as long as it stays above 59, I'm making my 1%, which is what I want to do. So let's find out the exact number. Okay, so clear that. I'm bringing in 115. You see the 115 right there? If I buy it at 59.57, sell off the 59s, I'm bringing in 115. All right, so I take 115. Okay, now I'm losing 57 cents because I'm selling it 57 cents below what I paid for it. But the premium is making up for it. Okay, so I'm subtracting the 57 cents, and it's going to leave me a grand total of 58, which is just at 1%. Okay, so I'm buying it for 59.57, selling it for 59. It says I'm making 58. This is one of those times where I do what call a limit order, and I'm saying, I want my 59 cents. I want my 1%. So I do a limit order on this one. Most of the time, I just do a market order, which is like, give it to me for whatever you got. I don't care about the pennies. But here, if I really care about the pennies, I'm going to do a limit order for, what is it? 116. Because they're selling it for 115, I want 116. I want, because once you do the math, I want my 59 cents. All right, so that's that. Let's take a look at the chart. First thing I want to see, okay, where's the high of the year? Where's the low of the year? Where was it? Where is it? I love this gap. Look at this gap here and this gap here. Why? Because gaps have a tendency to fill, especially when you're coming up off the bottom of the year. This is not just the 30-day bottom or the 90-day bottom. This is the bottom of the year. Okay, you have investors who've been buying this stock all year long, looking at where the hell is the freaking bottom. There it is, right there. Okay, CVS has been in business for over 100 years. Walgreens, over 100 years. Okay, they're basically the same. Okay, we have a group of people called the baby boomers, Gen X. You're talking millions upon million people all over the age of 60. What do people need over the age of 60? They need their prescription drugs. Where are they going to get it from? They're going to get it from Walgreens, CVS, Walmart, or somewhere online. But for the most part, CVS, Walgreens, and Walmart. Okay, this is CVS in almost every major city. There's a Walgreens in every major city. So I like CVS. Let's take a look at the numbers. All right. So a year ago, we were at 67. What is that? 67, 62. Topped out the beginning of January at 83.12, and we bottomed out a couple of days ago at 52.38. The last 90 days, here we go. The last 3 months. Check it out. The high, the low, where was it? Where is it? Okay, great. Let's see what the numbers are. Okay, 90 days ago, we opened up at 74.63. Okay, topped out and the end of March at 80.75. A little bit of a gap down from 80 down to 75. Then she kept on dropping, and then you have another gap down the end of April. Okay, the end of April to the beginning of May, she dropped from 67, 66 down to 56. That's $10. $10 on a $56 stock is a big drop. Okay, going sideways for a little bit. Last 30 days. Okay, so here's your last 30 days. First thing I want to see, the high, the low. Yep, this is going to be a no. Sorry. Why is it going to be a no? Look at the 30-day high. Here's your 30-day high there. Here's your 30-day bottom there. Big update yesterday. Huge update today. And you're what? Pennies away from a 30-day high? So it's either going to continue going up or it's going to come back down again. Well, that's what they do. They go up and they come down. They go up and they come down. Right now, your 30-day bottom is closing in on the 30-day top. Will it? I don't know. I don't want to take that chance. But that's me. You need to ask yourself the question yourself. Do you like CVS? Do you like it enough to take the chance that you're going to be holding it for a long time because it's closing in on that 30-day high? I don't know. But to me, no thanks. And I'm going to look at seasonality real quick. What does seasonality tell me? Okay, seasonality told me he's going to go sideways for the next couple of weeks. Nothing big. No big moves up, no big moves down, just basically sideways. But you got to really like CVS. In my humble opinion, I could be wrong, and I have been wrong once or twice. GSK. Who came up with GSK? GSK. Here we go. GSK something something advisor. Really? I've never heard of them. Okay, before I do anything, okay, I don't like. Here's the reason why I don't like it. Number one, I have no idea. I've never heard of the company before. I have no idea how consistent they are with their dividends. But look at this, the chart. Gap, 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 gap. There's way too many gaps. There's no consistency in this trading whatsoever. All right, so let's go to Yahoo Finance and find out what kind of dividend consistency GSK has. Because that's important to me. GSK. All right, all right, all right. Wow, look at that. Wow, all the way back to 1998. So they do have over 20 years of dividends. They have 20 years of dividends. Didn't say increased dividends. Okay, so let's take a look. 65, 50, 60, 54, 79, 50, 29, 28, 27, 31, 29, 53, 37, 44, 38, 55, 63, 62, 50, 41. All over the place. There's no consistency with the increase whatsoever. Okay, yeah, $1.25, 55, 50, 46, 58, 49, 50, 49, 60, 50, 49, all over the place. Look at recently, 52, 62, 35, 39, 38. Okay, so you're really going to have to ask yourself that question, okay? Do you like this company? Okay, they have dividends over the last 20 years, but they're not consistent with their increasing. Okay, so what does that tell you? Well, if a company is consistently increasing, okay, every single year, year after year after year after year, it means they're profitable and they're continuously being profitable. Now, if they're not increasing their dividends consistently, what does that mean? Well, they're not consistently profitable. They're not making more money year after year after year. So this one, 46. Okay, the 46s are going for 15. Yeah, no, sorry. Okay, too many gaps in the chart, number one. Number two, the numbers don't work. Number three, the inconsistency on the continuous increasing on the dividends is a no. That's just my humble opinion. Shamal, nice to see you again. Are you able to explain what happens to LPA yesterday? Went from 18 to 525 in 2 days and then dropped. Well, Shamal, number one, I don't do LPA. Never heard of them. Okay? So if it's a stock I've never heard of and I never look at, I have no idea why it did what it did. Okay, now we checked last week, or no, actually checked this week. We checked this week 9,520 companies. I can't look at all of them. Okay, especially companies, 18 bucks that I'm assuming LPA. Let me quickly check. Whoops, wrong thing. Open the wrong thing. LPA. All right. LPA has no dividends. There are no dividends in the selected time period. So LPA is not on my list. So I really couldn't tell you why it did what it did. Okay, because if you ever heard any of my videos, you would hear me say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. Basically, I don't want to be in front of my computer for more than 10 to 15 minutes. Because for me to take a look at a stock and see what it's going to do, it takes me less than 10 minutes. Because this week I only picked up 2 positions. No. I picked up 3 positions this week. But next week I'm only going to pick up 2. How long is it going to take me to find 2 positions to pick up? Okay, first thing I'm going to do is I'm going to go to the Market Watch. I'm going to put my list. Okay, here's my list. That's May. I want to go to June. All right, so here's June. Okay, here's the last week of May. Here's today right here. 2 weeks from now. All right, MPW, OXY, VFC, AIG, ALB, blah, 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 all these companies. These are the only things me personally, that I'm going to look at for my own trading account are the ones 2 weeks that are paying their dividends 2 weeks from next week. Okay, the third, those are the only ones I want to look at. That's it. I don't want to look at anything else, personally. Okay, fair. Do you like JEPI? No. There's a reason why I don't like JEPI, and I knew someone was going to bring one up this week. So for all you newbies here, let's go over JEPI. JEPI. Okay. First thing I want to see, what are the numbers looking like? Okay, 56.83. 56.83 to 57 is going for 10 cents. Are you shitting me? Really? I'm going to buy it at 56.83. And I love covered calls. I do. It's one of the safest trading strategies there is. But there's a few problems with this one. Okay? First of all, 56.83, the 57s are going for 10 cents. Not worth it. Second problem is that it only has monthlies. Because that 10 cents, I now have to hold it for 3 weeks. 3 weeks, which means I'm getting 3 cents per week on a $56 stock. Tell me, does that sound like a good investment to you? Where else do I have a problem with JEPI? Okay, let's go right here. JEPI. This is one of those stocks where I like to say to people, what the fuck were you thinking? Okay, it pays monthly, which is a good thing. I like that idea that it pays monthly. But what is it that I don't like about JEPI? Watch this. Are you ready? Are you ready for this? Are you sure? Okay, so I'm going to invest my money into JEPI, and I'm going to get a yield of 7.63. Okay, so this channel here that you just came on is dedicated to dividend stocks for weekly cash flow for a safe, predictable, consistent 1% per week. 1% per week. That's over 50% per year. You're talking about putting your money into JEPI, which is giving you 7.63. If that works for you, great. You're in the wrong place. Seriously. What else is it that I don't like about JEPI? Holdings. Let's see exactly what's in this ETF. Because that's what it is. It's an ETF, an electronically traded fund. What does that mean? That means you don't want to take responsibility for your own money. You're giving it to a computer. Okay? Electronically traded funds, ETF. All right, what don't I like about it? Well, here we go. Take a look. Trane, Progressive, Amazon, Microsoft, Intuit, MasterCard, ExxonMobil, Alphabet, Visa, Southern Company. Okay. You could do these companies individually just for the fun of it. Okay, Microsoft. Let's take a look at Microsoft by itself. Just by itself. I like Microsoft by itself. Okay, MSFT. Okay, 415. The 415s are going for 470. That's over 1%. If you bought just Microsoft, okay, and did a covered call against Microsoft every single week, just Microsoft, that's over 50% per year. Because right here, 415.19, the 415s, 470, that's over 1%. But yet you want to put your money into JEPI, into some computer-generated trading algorithm. Fine. It's only giving you 7.6%. I didn't go to college, but I do know that 50% is a lot better than 7% or 7.6%. Let's be realistic. Fascinating football videos. How are you doing this evening? Oh, check that out, Shmal. Thank you very much for that. That was nice of you. All right, so that's one of the reasons I don't like ETFs. Because basically what you're doing, okay, this is just my humble opinion, okay, you go to school, go to college, get a good job, work 30, 40, 50 years of your life, and then you take all your money and say, hey, I'm too lazy to do it myself. You do it, give me shit back. Okay, if you took care of your responsibility for your own money, you can get 30 to 50% per year. You give it to a computer, an ETF, electronically traded fund, and then to give you 7.6. Come on, this is perfect opportunity to WTF you thinking. Okay? I love those. What the fuck were you thinking when you bought this? Because a lot of people are like that, and there's nothing wrong with it. Chad, happy Friday. Well, happy Friday to you, sir. There's absolutely nothing wrong with you giving your money to someone else to take care of it. Okay? Ooh, what happened over here? This thing turned off for some strange reason. Why was that? Yahoo, YouTube turned off. Resume. I don't know why it stopped. Your hair is beautiful. Oh, funny, Mike. Yep, it's starting to act up again already. All right, so, okay, that's my take on JEPI in the monthlies. Yeah, I just don't do those. All right, Nike is next. Nike, N-K-E, Nike, 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 Nike. First thing, always first thing. Well, other than the calendar, because calendar's the first thing. Second thing, 95.31. The 95 is going for 101. If I subtract 31 out of there, I'm not getting my 95 anymore. Sorry, Nike doesn't work this week. Now, don't get me wrong. Nike's an awesome company. It is, and it works a lot. It just doesn't work this week. Richie Rich, did I miss Disney? Yes, you did. Disney was a no. Okay? Sorry. The numbers just did not work for Disney this year. Or I should say this quarter. Better audio now as background noise is gone. Yeah. FL went off this week. Great call. FL, Foot Locker. No. I didn't do Foot Locker. Marv to the moon. Never heard of Marv. Sorry. All right. So Nike's a no. Exxon Mobil. Ooh, I made 1% on Nike the last 2 weeks. All right, Albert. Way to go. Secretary, you did Foot Locker? All right, you know what? I'm going to put Foot Locker down. Okay, we'll take a look at Foot Locker. Because Foot Locker used to be on our list, but they just recently stopped paying dividends. Got out of Nike this week. Well, that's good. Did you make your money on it? That's what we're doing. That's what we're here for. We want to make that boring as hell, 1% per week. I mean, think about it. It's boring. Who wants 1% per week? Left a lot on the table selling the calls, though. Okay, but did you at least make your 1%? That's my focus. Holy shit, we're up over 115. Cool. All right, so we're saying no to Nike. UPS we already did. Now here we go. Now we're looking at Kohl's. People want to take a look at Kohl's. Here it comes. Here comes Kohl's. KFS. Do we have Walgreens? I'm going to write Walgreens down because we've been waiting weeks for Walgreens to find a bottom. WBA. Oh, Secretariat, 3%? Yeah, I'm going to send you my address and you're going to send me some shit. Anyway, no, I'm glad you're doing good. That's good. You know what? I like it when people make money. You know what? I don't know what I made this week. Seriously, I don't. I will find out tomorrow when all the options expire. Because for those of you guys who don't know, options expire on Saturday. They do not expire on Friday. Okay? You can't do anything Saturday, but they expire on Saturday. Okay? So I'll find out what exact number is. Well, it seems to be sound, but who knows? Okay, Richie Rich, WBA seems to have bounced. Seems to have bounced, but who knows? Yeah. Now, we've been waiting weeks for Walgreens to find its bottom. Okay, then we think it found it the other day. But we're going to look at Walgreens in a little bit, so let's not forget about that. Right now, we're looking at Kohl's. First thing I want to see with Kohl's is 23.48. The 23.50s are going for 23. Okay, so you're making your 1% on Kohl's. Okay, I'm making good money on my premiums, but I'm not even due to drops. Okay, Al. HPQ, Hewlett Packard. HPQ. Okay, so Daddy Tello, please don't do that. I don't do politics whatsoever, and I don't appreciate it. Seriously, I don't. Okay? This is United States. I honestly believe we should keep our own freaking business to our own and not get involved in other people's crap, because it has nothing to do with us. That's just my opinion. Okay? We're all entitled to our own opinion. No politics. Thank you also, Albert. I don't do politics because I'm one of those people who just doesn't give a shit. I don't. Whoever's in the big chair, we're going to get screwed anyway. That's why I'm sharing this information, to show you, even though they're up there trying to screw us, there's still ways for us to make money. Okay? That's just my opinion. Sure, we're looking at Kohl's. So we are getting our 1%. Great. Where's our high? Where's our low? Where was it? Where is it? Okay? So let's take a good look at the numbers. Verizon, hey, Brown? VZ. I like VZ. VZ doesn't work every time, but VZ, when it works, it works. You know, these are good quality companies. You've heard of Kohl's. You've heard of Walgreens. You've heard of Verizon. Okay, what's the method to the madness here? All right, Prayer Kid, you just got here, just bought some today, yesterday. Rio's a no. I've done Rio many a times, and it's always been a no, but if you like to sit here and chill, I can show you why it's a no. But right now, we're looking at Kohl's. Now, at this moment in time, Kohl's a year ago was at 1858. Got a triple high, okay, beginning of August, end of December, and again at the end of March. 3 times. You see that? 1, 2, 3. Hit the 29.50, 29.60 area. And the bottom, we got a double bottom here in October. Okay, the bottom was in October, right around 1771. Okay, what you're taking Verizon long-term hold? I just transferred old 401k, bought 1,000 shares of it yesterday. Hey, Brown Munda. Okay, we're going to be looking at Verizon in a minute, and I'll give you my opinion. But just to let you know, the longest I've ever held anything is 9 months. Now, I've been trading for over 20 years. Longest I've ever held anything was 9 months. Okay, Verizon. If you want to hold on to your Verizon, hey, that's up to you. But me, no. Okay, one of my cameras fell. I'm listening. All right, so let's go back here. Let's put that there. Oh, fuck, that hurts. Hurts getting old. Okay, winner 86. Didn't we say no to Gild the other day? G-I-L-D, but we'll take a look at it again. G-I-L-D. All right. All right, so last 90 days. Okay, first thing I want to look at, the high, the low. Whoops, the low's over here. Sorry about that. I didn't see that one. Where was it? Where is it? I like the fact that it's bouncing off that, but I like 2 days to the upside. Coca-Cola. Sorry, that's a no. Don't get me wrong. I love Coca-Cola. Really do. Okay? I even buy it once in a while. I never buy the stock because Coca-Cola is never given over a 0.5% of a premium. So why would I do that? You must have missed it. All right, Larry BX, what is that, BlackRock? That's a no. But I'll take a look at it anyway. BX. Got some 250 leaps on FedEx last week. What's your thoughts? Prayer Kid, hold on a second. The leaps on FedEx. FDX. Boeing, is that BA? BA. Miriam, how are you doing, Miriam? You know what's strange? There's not very many women here, but women make better traders than men. They do. Right? Don't feel bad, guys, but women do make better traders than men. Men have a tendency not to want to admit when they're wrong. It's Friday night. Take a break. Hey, Jonathan, you know what? I've been doing this since the beginning of January. I've missed 2 days. That's it. Had to take the wife to the hospital one day, and the other day I was just sick as a dog. Do you see MLPs? I have no idea what MLPs are. MLP. All right, so let's get back to where we are. We're looking at Kohl's at the moment. All right, so we have our high, we have our low. Where was it? Where is it? Let's take a look at the last 30 days. Kohl's is the next company going bankrupt. I don't think so. And the reason why I don't think so, I think Kohl's had, didn't they have a buyout offer, Kohl's? See, you're rubbing your shoulder. Yeah. Believe it or not, I almost did nothing today. Almost. Okay, I had to do something. I think so. All right. Well, you know what? If you don't like Kohl's, don't buy it. It's as simple as that. Okay, Kohl's has been in business been around for a while. Now, they may move from a store to online, but that's just one of those things you have to take a look at. Master limited partnerships. Oh, yeah, if they don't offer dividends and consistently increase dividends, it's going to be a no. Tap the like button. GOKU. Never heard of it. Okay, so Kohl's. All right, so we have our 30-day high right here on the 14th. Where's our 30-day bottom? Was yesterday. I like 2 days to the upside. Okay, big gap down. Why did that happen? Now, I actually have Kohl's at 27. I do. Okay, did I expect this to happen yesterday? No, I didn't. But it is what it is. Mobile Notary. Hey, you're back again. What does a 30-day chart have to look like before you pull the trigger? Oh, that's a good question. Let me put CSCO on the list first. CSCO. What I prefer on a 30-day chart, I like a 30-day high. I like a 30-day bottom. Okay? And I like 2 days to the upside. Okay? Bouncing up. Because there can only be one 30-day top. No matter how much you want to look at it, no matter how much you want to argue, there can only be one 30-day top. And there can only be one 30-day bottom. Because the top, you'll get people start taking profits. Okay? Because it gets to a certain height, and then people say, wait a minute, it's not worth anymore. Because if it was worth more than 28 bucks, it would have went higher. But it didn't, because the investors, that's you and me, we said, no, it ain't worth that much. MPL example, MPLX. MPLX. All right, Eric, I'll take a look at that. Okay, MPLX. We'll take a look at that in a little bit. Chad Wineski. Wisneski. Yes, I remember that. You were here before. I remember that name. Been doing cash secured puts on Ford, and premium isn't great. Is it better to own or go covered call? All right, Chad, give me 1 second. Got into T-Row thinking it would run up to the EX date. T-Row doesn't have their EX date quite ready yet. TROW. Should I buy Tesla? Yeah. All right. Hung Hao. Is that right? Hung Hao? Yeah. I don't do Tesla. Tesla does not pay dividends. Okay. Why would I invest my money into a company that's not going to share profits? Now, if you're younger, yeah, I can see that because you're looking for capital appreciation. You're looking for the stock to go from here to here. Me? No. I'm looking for the stock to go sideways. Okay. I want consistent cash flow. That's what I want. Safe, predictable, consistent 1% per week. Now, whatever your account is, just take 1% of that. Can I deal with that 1% per week? Which is about 50% per year. Can you live off that? That's the question you need to ask yourself. Ford is cheap. You should do experimental both simultaneously. It's a good question there, Albert. I mean, that's a good answer. But to answer the question, he's doing cash secured puts. Basically, you're taking a big chunk of money, you're putting that to a side, and then you're collecting a payment on it. The exact same thing as a covered call. Okay, you're putting a big chunk of money aside, and you're collecting a premium on it. Same thing. But I like covered calls because they're on the positive side. I don't like negatives. Okay, you attract what you put out. Well, wait a minute. As a man thinketh, so becomes he. That's written right in the Bible 2,000 years ago. Okay, so if you're doing calls and puts, hey, I want it to go up. Hey, I want it to go down. No. I just want things to go up. Okay, I don't like to have separations. Right, do the covered calls. That's just my opinion. But I only do covered calls when everything makes sense. Walgreens closed up today for the second day in a row. Yeah, we're going to get to Walgreens in a little bit, Kelly. Nice to see you again, Miss Kelly. With selling a put, you're hoping it goes up. Yes, that's true. But also selling a put it's still a negative aspect. Okay? I just don't like the negativity. Call me weird if you like. Calvin Hill, welcome. It's not really Calvin Hill, but we'll welcome him anyway. Okay, I've talked to Calvin Hill. Calvin Hill has no interest in dividend stocks whatsoever. And Calvin Hill has more imposters than I do. Okay, I have 22 people pretending to be me. Calvin Hill has a whole shitload more than me. He's been doing it longer. Hey, tea with Marie. Marie, I am sorry about today. I couldn't get Patreon to upload the link. So I sent it to the, what do you call it? Yeah, Calvin Hill is the boss. He is. He's freaking awesome at what he does. But Marie, I couldn't get Patreon to send the link for the open for the trading this afternoon, so I put it on the Discord. Okay, Corey Napoleon, why do you live stream this? I'm retired. It's my life. I can do whatever I want, and I'm sharing what I know. Okay, I'm at that point in my life, to be totally honest with you, Mr. Ryan, I'm at the point in my life where I just want to share my knowledge. I am building a corporation for my grandson to inherit. He's 4 years old. I'm doing what you call the foundation, the legwork. Grandpa did this for X amount of time. Yeah, well, Grandpa's doing it right now. So in 20 years, they'll say, well, 20 years ago, Grandpa was doing this. This is squirrel. Yep, all right, 86, I got you. Have a question? Go ahead, Corey. Why not stream this? I am streaming this. Doc, you went online mostly to make... Thanks for sharing. You got it. Hey, Doc, you got to let me know when a good day to come on out there is. Thanks for sharing. All right, Ryan, you're welcome. No, because see, Ryan, I'm looking, to be totally honest with you, okay? Just totally honest. I'm looking to set up a, what do you call it? Either a hedge fund or an IDF, which is an insurance dedicated fund. Because eventually, I'm going to take all my assets and put it into an IUL. I don't know if any of you guys know what an IUL is, but I have a certain strategy that I want to use. In order to do that, it's going to take me 2 years in order to do the groundwork, which is what I'm doing now. So I've been doing this for a year, laying the groundwork. What platform am I using? Well, right behind you, Corey, that's Thinkorswim. It's offered through Charles Schwab. It's free to download. You can download it onto your computer right from thinkorswim.com. I have Robinhood. I have Robinhood also. I have 6 accounts. Okay, 6. I have 6 accounts. I share 2 of them publicly, only 2, and it's always the exact same strategy. Simple, safe, predictable, 1% per week. Should people take risks while they're young? That's the only time to take risks. Because I'm 60. I don't take risks anymore. I shouldn't say that. I was playing soccer a couple of weeks ago. That's how I broke my collarbone. My TOS crashed. Oh, no. I also have TOS. Good. Yeah, so Playton, is that X? Payton, GX? Yeah, if you're young, you could put, $1,000 into this stock and wait for it to go up. Yeah, no. Some of us here, no. We want safe, predictable, consistent 1% per week. So nothing but pre-qualified dividend stocks. Those are companies that have increased their dividends for more than 20 years. Why? Well, because next year they're going to increase it again. And the year after that, they're going to increase it again. You got companies like Coca-Cola that have been increasing in dividends for over 60 years. GPC, General Parts Corporation, 70 years. That's seven decades. 70 years of increased dividends. I get to hear this selling covered put strategy. Yeah, I don't do that. Sorry. Would you win with bigger firm or local firm starting out in the advisor industry? I'm not looking for money. Seriously, I'm not. Okay? I make a safe, predictable, consistent 1% per week. I do my own time. I'm online for about an hour, hour and a half in the morning. Okay? Here, I'm on 3 hours at night because I enjoy it. Okay? At some point in time, I'm no longer going to enjoy it, and I won't be doing this anymore. Okay? I'm also looking for just a small group of people that want to consistently trade live every day. Okay, so right now we have a nice number of people that do trade with me live every morning, Monday, Tuesday, Wednesday, Thursday. Okay, from 9 a.m. to 10 or 11 a.m. Okay, and on Fridays it's 3 p.m. until we're done. Why 3 p.m. on Friday? Well, because we buy on Monday and we sell a covered call that expires on Friday. So we want to check on Friday to make sure there's nothing that we need to do to maybe save us from losing anything or perhaps get a better strategy. Okay, but Joshua's journey, selling covered puts, it's a good strategy. Don't get me wrong. I don't teach it, but it's a good strategy. But it's basically the same thing as a covered call. You're putting a chunk of money aside and you're collecting a premium. Fine. Okay, same thing with covered call. You're putting a chunk of money aside and you're collecting a premium. All right. Gotcha. I missed a couple questions. Damn it. All right. Check out Thrivent. I have no idea what Thrivent is. Corey. All right, Corey. All right. Do you know anything about Forex? Yes, I do. Is there a platform that never closed until Friday around 2 London? Yeah, I get that. I don't like Forex. It's not regulated, and I have to sit in front of it, and I don't like it. Okay, now, for those who do like Forex, if you like sitting in front of your computer for long periods of time, fine. Hey, I could make a shit ton of money if I want to sit in front of my computer. I don't. I'm perfectly happy. And I have a very hard time comprehending why people don't understand that. It's my time. I should be able to spend it the way I want to. If I'm happy getting 1% per week, which I am, okay, it takes me less than 10 minutes to get 1% per week, safely, predictably, consistently. So why would I want to sit in front of the computer longer than I had to? I got to hang out with my grandson today. What did we watch today? Because I've only been here in Florida for a couple of weeks. I think I'm going on week number 3. Very first Sunday I broke my collarbone, so I haven't done anything for the past 2 weeks. What did we watch today? We watched The Rescuers yesterday. We watched Sleeping Beauty today. And tomorrow we'll watch something else. But I hang out with my grandson. He's 4 years old. Okay, we watch TV. We have popsicles. We have peanut butter and jelly, and we go jump in the pool. That's what I do for my day. Dude, do you not understand? What is your strategy then? My strategy is covered calls on quality stocks. That's it. That's my strategy. Find a good quality stocks. There's only about 300 of them. Okay? Buy them 2 weeks before the EX date. Do a covered call and collect that 1% safe, predictable, consistent. Joshua, I'm not quite sure how to answer that question because I think I did. All right. Thank you. Oh, I missed them. Poor man's covered call. How is this different than what you do? Ooh, the poor man's covered call. You're talking about calendar spreads. Okay, I don't do calendar spreads here. I do calendar spreads, but not on this platform, not on this account. Okay? Now, I think you and I have had this conversation once or twice already. I love poor man's calendar spread. Has a lot more risk than this. This has almost hardly any risk whatsoever. You're buying a good quality stock. That's it. You're selling somebody else the right to buy it from you for the exact same price you paid for it, and you're collecting a premium. Where's the risk? Okay? Poor man's covered call is you're buying a long-term, you're buying a leap. Okay? That eventually goes to zero. Eventually. Yeah, you probably get out within 30 days before the expiration or 90 days before the expiration, depending on your time frame and your calculations. Yeah, but it expires. Okay? All right. Do you have 3 p.m. call today? I didn't get one. Yeah, Barry, we did. I had an issue with Patreon because Patreon is where I usually send out the links. So instead of doing it on Patreon, I went to Patreon and then it went to the Discord. So the link was sent to the Discord. So I'm gonna have to do that from now on. Is go because usually I've never had a problem with Patreon before. Never. This is the only time I had a problem with Patreon. What do you call that wheel that keeps turning and turning, 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 and turning and turning? Buffering. It kept buffering, and I'm standing right next to the damn. What do you call that damn? The damn box. All right. So sorry about that, Barry. Hope you did okay. Let's go back to the next one. The Rowdy, yeah, same right there. Yep, we're gonna do both docs picks very shortly. What are the 300 quality stocks? Yeah, trade guy, how are you doing? The router, yep, the router, yep. I was standing right next to the router and still couldn't get a good signal. All right, so, well, actually, no, it wasn't I couldn't get a good signal. I was sitting next to the router and Patreon wasn't working. Okay, so I went to Discord and I put the link in the Discord. Okay, so next on the list. So I like Kohl's. All right, so and I do have Kohl's. Kohl's, I will probably more than likely take a gander at looking at, because I bought it at 27. Okay, now it's at 22. So come Monday, I will take a look at it and see if it's worth the effort of dollar cost averaging down. Can you go over the last trade you did and go over it? Kohl's? We just did that one. I'm going to tune in tomorrow morning with you. Well, you'll be tuning in by yourself tomorrow morning, Saturday morning. Okay? I take 2 days off. Okay? Saturday morning, Sunday morning. I do every night. Okay? Every night, 9 p.m. to 11:30. But Saturday mornings and Sunday mornings. Actually, Friday, I don't do Friday mornings. I do Saturday mornings and I do Sunday mornings. My bad. I forgot it's Friday. I got here late. Mobile Notary Apostle Courier. Cool beans. All right, so, all right, that's Kohl's. Next on the list, man, now we're on Doc's list. AEO. AEO, you on the vowels. Yeah. All right. AEO, for those of you who like AEO, 22.79, so 23 is going for 10 cents. That's big bet, no. But I already own AEO. Okay? Now, AEO dropped. Holy cow. Now, I'm into AEO at 26. Okay? I'm here at 26. I sold the 24s, collected a nice premium. I did. But now she's at 22. Ugh. Look at the 22s. Going for crap. The 2250s go for 21. I don't know why that is. That's weird. Okay, so I might have to go over different numbers. I might have to look at chicken nuggets. Do you have a course where you could teach this? Yes, I do. And I'm actually working on, for those of you guys that didn't know, I'm actually redoing the website. So we're in the process, again, the website redone, all right? And all the books will be available on the website along with all the, what do you call it? All the social media links, all that kind of nice, neat, fun stuff. It's funny, if I hold it tight, it doesn't hurt. Getting old sucks. It does. Who determines the premium? That's the market maker. Okay, chicken nuggets, you're welcome. Okay, so that's AEO. AEO's a no. Sorry, Doc. Only because it dropped and the premiums just aren't working out. Okay, so if you're thinking of getting AEO next week, the numbers just aren't working. Sorry. But I do own AEO and I will have to address it first thing Monday morning. Next on the list, Albemarle. Now, just to let you know, out of every trade I've done so far this year, let's go back, I'll show them to you. Okay, that 10minutetrade.com. Here's all my trades this year. Okay, week 18, 17, 16, 15, 14, all the way down to week number 1. Albemarle, ALB, is the only stock I actually lost money on this year so far. So I lost money on one. That's it. If you think you're going to get in and make trades and not lose, sadly mistaken. Everybody loses at some point, unless, of course, your name's Pelosi. Don't like that woman. I think she cheats, and I think she thinks she's better than all of us. Anyway, out of all your books, which one would you recommend to start with? Well, book number 14. That's the one I just finished. Kroger's are the best stocks, trust me. Kroger is on my list. It is. Tap to like, hello. Sedan Micro Maniacs. Crypto Maniacs. How you doing? Love inside trade. Yeah, why is it that Congress can get away with insider trading and we the people can't? I mean, that's just so unfair. Need to get some hush money. Yeah, I'd like to get some hush money too. The same thing with old Billy Boy. They both got hush money. Trump and Clinton both paid hush money for doing something they shouldn't have been doing. Why do one get one? Why is one, getting prosecuted and the other one not? What do you think about SPYG? It's a no. Sorry. Do as I say, not as I do? Yeah, that's funny. It's because they run the same circles. Yeah, that's true too. AMZY. Sorry, that's going to be a no also. So they all know what another is about to do. Except, yep. What are you trading on? MDLZ. Yeah, we'll take a look at MDLZ. You guys got me two classes of these questions. Do you look at the beta when considering buying stocks? No. Because one made payment and open and one hit it. All right, Albert, I'm going to disagree with you. You got two guys doing something they shouldn't have been doing, both paid off what they shouldn't have done in the first place, and one's in trouble, one's not. One's a Democrat, one's a Republican. You figure it out. Do you trade the same stocks? Yes, I do, over and over and over again. Okay? Now, Albert, just between you and I, if old Donnie Boy said, all right, you know what? I think I'm not going to do this anymore. I'm going to stay home with my kids, not do anything. They drop all the lawsuits. Let's not kid ourselves. They're only doing it to keep them out of the White House. All right, ALB, that's what we're looking at. We looked at ALB. ALB. 122.59. Okay, the last trade, 122.59. So I can buy it at 122.99. The 123s, 247. That's almost 2%. Kroger owns 7-Eleven. All right, let's take a look at Kroger. We'll put Kroger on the list, KR. Okay, now Kroger is on No Politics. You're right, WTRG. WTRG. Never heard of it, but we'll get there. All right, so ALB, 122.99. The 123s, 247. That's almost 2%. Almost 2%. Okay, where's the high? Where's the low? Where was it? Where is it? I don't quite like where it is, but we're going to take a good, better look at it. I'm in ALB at 28. You can't be in ALB at 28 because it's at 122 at the moment. If you bought it at 28, you bought it decades ago. Are you taking into account weekend time value? Sometimes yes, sometimes no. 128 makes more sense. All right, so let's take a look at the chart on ALB. A year ago, we were at 197.52, have a double top at 246 in the middle of July last year. Look at the bottom we have here. Right there, March 5th, 106.77. So a year ago, she's in the 200s. Now she dropped down to 106. Okay. Last 90 days. Okay, 90 days ago, here's our high, here's our bottom. All right, you have the high one day, very next day is the bottom. She goes up, pulls back, up, pulls back. All right, last 30 days. All right, so 90 days ago, 90 days ago, we had a high at 140.22. Okay, very next day, we had our 90-day bottom, 106.76. Now that's weird. Where do you go from a high to a low very next day? Are you from? I'm assuming where am I from? I'm from the Boston area. I don't understand how these graphs show anything. TBH candle wicks, reversals. It's all confusing. Oh, I'm sorry, you find it confusing. I could change it. You want to see it more confusing? All right, is that better? Okay. Red represents down, green represents up. Up, down, up, down, up, down, up, down, up, down, up, down, up, down. Okay, I don't know how you get confusing out of that. Here's the high, here's the low. Okay, here's where it was, here's where it is. Either way, you can do line chart, which I personally don't like. You can do a bar chart, tells you the exact same thing. The high, the low, okay, goes up, goes down, goes up, goes down, goes up, goes down. I get that, but people set stops and call options, etc., based off of their own line. Yeah, I don't do stops. Sorry. Okay, I was there. I witnessed in '87 where the computers took over and had a big, huge freaking drop because of computer stops. How are they getting to the baseline? I have no idea what you're talking about the baseline. Okay, all I know is what was the last price today? What can I buy it first thing Monday morning? Okay, if I buy it first thing Monday morning at $122.99, I sell someone the right to buy it from me at $123, which is 1 cent more than I'm paying for it. They're going to pay me a premium of $2.47. I like that idea. It's almost 2% of what I'm looking at. Are you from Canada? No, I'm just south of Boston. Do you use level 2? No, I like to keep things simple. Okay, now I've been trading for over 20 years. I have level 5 trading approval, level 5, okay? But I don't use it all the time. This is what I teach. It's simple, it's safe, it's predictable, it's consistent. Okay, it was created for a 9-year-old little girl. Okay, my daughter back in '08 wanted to learn how to trade what daddy was doing. So I had to come up with a trading strategy specifically for her. It had to be simple. It had to be safe, it had to be predictable, it had to be consistent, and it had to be no way she could lose. That's the 5 criteria when you're trying to teach a 9-year-old how to trade. Okay, 5 rules. Never buy something you don't want to hold. Never sell at a loss. Make sure the company has 20 years of increased dividends, weekly options, and make sure the numbers work. The numbers. What am I buying it for? What am I selling it for? A covered call is the absolute safest trading strategy there is. You're buying a stock, you're selling somebody else the rights to buy it from you, whatever that price is. I like the level you set out to buy and sell at, say, most call. It opens at 10 and raises to 12 maybe. No idea what you're talking about, but okay. Love seeing you on. Okay, thanks, Austin. Had a few we talked about this week. Up 6% on the week. Is that decent? That's awesome. I look for 1% per week. You made 6% this week. Good for you. Man, teach me, but in dumb terms. Okay. Austin, hold on a second. S&P way above average for a week. Don't expect it every time. Correct, 86. Don't expect it every time. Okay, if we go back to here, okay, I'm gonna show you some of my numbers for this year. All right, I'm just gonna do one account. We're gonna concentrate on this counter here, the cash account. Okay, week 1, 2.12. Week 2, 1.3. Week 3, 0.85. Week 4, 0.9. Week 5, 1.03. Week 6, 1.06. Week 7, 1.9. Week 8, 2.03. Week 9, 2.32. Week 10, 4.63. Week 11, 3.9. 0.9, 1.2, 1.5, 1.2, 1.19, 1.19, 2.61. Okay, I haven't listed week 19s yet. Okay, but that's the average, roughly around 1% per week. Okay, week account number 1 is up 27.26 since the beginning of the year. Look at account number 2. It's up 56.85. But that's margin. That's a whole shitload more risk. It just so happens that I'm good at what I do. Let's go back to where we were. So yeah, your point, whatever you got, 5.9, yeah, that doesn't happen all the time. Okay? We're looking at ALB. Okay, so let me go back to the candlesticks because I like the candlesticks. I like to have consistency. Okay, I like to have consistency. That way everything's the same all the time. Now, you'll have a move my mouse pad. Okay, I like consistency to a point where, here we go, take a quick gander at this.
Internet website called.
Have a good day. Come on, bump it up a little bit. Let's do 2 trades a month. 20 days. 20 days in the month of January. You can do 2. 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 24 for the whole year. And if you get at least 2%, that's close to 50% a year. 50% per year. That's close.
Okay, so that video right there, you notice I have more here. Okay, the funny thing about that video, see that shirt? I still have that shirt. This video was shot 12 years ago. 12 years ago, I'm standing in front of a whiteboard where I had to do all this stuff longhand, where I didn't have the computer access to all the stuff I have nowadays. So yeah, I've been doing this for a while, and the average over 1% per week. Let's get out of there. Back here. Okay, so we're still looking at Able Mall. That's in the last 90 days. 30 days. Here we go. Last 30 days. First thing I want to take a look at is, where is my high? Where is my low? Where was it 30 days ago? Where is it now? All right, fine. We see what 30 days ago, we opened up at 120.52. Very next day, we bottomed out at 117.35. From there, she shoots up, finds the high of the 30-day period. You can only have one high of the 30-day period. That's it, only one. And that just so happens to be 137.50. Now, from the 137.50, you have you and me, the buyers and sellers, saying, oh, hell no, it's not worth that. So what happens? We get profit taking. She drops, retrace, drops, retrace, drops. Here's the new 30-day bottom. Today was the new 30-day bottom. Okay, but is it? Is it? Monday, it's either going to drop or go up. One or the other. Okay, I love it personally. This is one of my things I love. I love 30-day top, 30-day bottom. But I like 2 days to the upside. So we don't know if this is the bottom yet. We don't. Monday, it's either going to go down more or she's going to go up. One or the other. It's a 50-50 shot. It's going to go down. And if it goes down, it's going to look for a new 30-day bottom. Okay? Because in 2 days, these are going to drop off. Okay? 30 days ago, it's going to drop off in 2 days. And our new 30-day bottom is going to be right here. Until we find out what's going to happen on Monday. And we won't know that until Monday comes. It's really that simple. But if I like ALB, 122.99, the 123s, 247, let's see exactly how much money that is. Okay, so if I'm walking away with 247, okay, and it's costing me, divided by 122.99, gives me a grand total of 2%. Exactly 2%. If I like Able Mall. That's the question you need to ask yourself. Do I like Able Mall? Am I willing to buy it and willing to hold on to it until it hits my target? What's my target? Well, if I'm buying it at 122.99 and I'm selling the 123s, well, my target's 123, and that's on Friday. Where is it right now? Well, look where it is right now. It's at 122.59. Okay, where's the 123? The 123 is right there. It's like right next to it. So it doesn't have that far to go, but I'm still collecting 2% on it. So the question is, do I like Able Mall? Do I want to own Able Mall? That's it. All right, so I'm missing some questions. Uh-oh, I got to prove who I am. Here we go. Verification. Here we go. Oh, verification complete. Yay. All right, now, what are these, some of these questions I missed? All right. It's under options in your trading platform. Okay, I'm not quite sure what he means by that. What's a covered call? A covered call? Oh, wow. Let me think. Think of a covered call as a non-refundable deposit. Okay, you buy something. Let's say you have a car sitting in your yard, an old Camaro, and you want to sell it. Slap a sign on there for $1,000. Okay, some guy named Tom comes by and says, "Hey, I like your car. I want to buy it. Here, take $100. Hold it for me until Friday. I'll come back, give you $1,000 on Friday." He shows up on Friday. He takes the car. He doesn't show up on Friday. He doesn't take the car. You keep the $100, and then Monday you do it all over again. You sell it to someone else. Basically the same thing. You're buying a stock, $122.99. Now you own the stock. Okay, now Tom or Jeff or Sally or Peter comes by and say, "Hey, I want to buy that stock from you. I want to buy it from you at $123. I'll be back on Friday to pick it up from you for $123. However, here, take $2.47 per share to hold it for me. If I show up, I pick it up and I pay you the $123. This is a non-refundable deposit, and you don't get to deduct it from the purchase price. That is just for the privilege of me taking it off the market, because once you sell a covered call, you can't do anything with that stock until that option expires. It's a contract. If I'm buying it at $122.99 and I'm selling it to Peter for $123, and he's giving me $2.47 for me to take it off the market until Friday comes. When Friday comes, whatever the stock is at, if it's above $123, okay, great. Peter's going to come and he's going to buy it from me at $123. If it's at $122.99, he's not going to. Okay? And then Monday, I still own the stock and I do the same thing all over again. Okay, next question. It's under options. There you go. All right, redeem it. That's what I was asking, sir, how you define what you're going to get in and out based on off-wick candles. No, the wick candles don't mean crap. Okay, that already happened. Okay, that already happened. That has got nothing to do with anything. The candles, okay, the top of the wick is the high of the day. The bottom of the wick is the low of the day. Okay? The candle itself, when it is green, a green candle, the bottom is the opening of the day. The top is the close of the day. On a red candle, the top is the opening of the day, and the bottom is the close of the day. There's 4 numbers. Okay? The opening of the day, the close of the day, the high of the day, the low of the day. That's what's represented on the candles. And that's all his story. That's got nothing to do with what's coming up on Monday. First thing Monday morning, that's the price right there, the market maker. And these numbers are going to change first thing Monday morning. Every single number here is going to change Monday morning. But this gives you a rough idea of what it's going to be. It's going to be right around $122.99. Okay, so if that's what I can buy it for, okay, it has nothing to do with all this crap. This has already happened. This is today, history. Yesterday, day before, day before, day before, day before, day before. That's all historical performance. That's what it's already done. We have no idea what it's going to do. The only thing I do know is here's the 30-day high, here's the 30-day bottom. Okay? If I want to buy it on Monday, I'm paying $122.99. Certain things I know, certain things I don't know. Okay? What's the market maker going to open it up on Monday? I have no idea. But usually, it's pretty close to this. Okay? And we're just going by numbers. Now, we're not buying anything today, because we can't buy anything today. We can't buy anything until Monday. But first thing Monday morning, once these things all change, the math is always the same. If I'm buying it for this price, what's the closest strike price? What's the closest strike price paying? What am I getting? Is that 1% or not? So, hopefully I answered the questions. Call options hit for DPST. I have no idea what DPST is. Sorry. All right. but you must first understand the basics. That's true, you got to understand the basics. Now, basically, the basics are, let's see if I can explain this. Let's say, hypothetically, you're going into a grocery store, 7-Eleven, Circle K, whatever's right around the corner from you. As you walk into the store, you take one step in the store, you have the owner who's at the cashier. He's the market maker. He decides the prices, okay? He buys it from whatever company, milk, eggs, bread, cheese, dry goods, drinks, sodas, beer, alcohol, okay? It's all in its own little categories, okay? You have your dry goods here, you have your meats, you have your pastas, your soups, your fresh meat over here, your seafood back here, your beer over there, all different companies. Same thing with the stock market. You walk into the stock market, you have your energy stocks, you have your oil stocks, you have your transportation, you have your public goods, you have your utilities. Same thing. But there's 9,520 different companies of different products you can buy as soon as you walk in the stock market. Okay? As soon as you walk in, stock market, 9,520. 50-50 shot. Go to the right, all those companies there share their profits. What do you mean? Well, if the company's profitable, they share them. With you and me, we're the buyers and sellers. As soon as you buy a stock, you become part owner in that company. If you buy a company that shares the profits, they're going to give you a dividend check either every 90 days, every 60 days, or however they do it. The other side, they don't share their profits. They take all their money and they put it back into the company for capital appreciation. So the stock price is higher and higher. Okay? That's the first choice you got to make. Here in this platform, this little arena, this little whatever you want to call this, I only invest in companies that share their profits because I'm at a point in my life where I'm retired and I can take my little nest egg and I can live off of whatever money I make off of it. Okay? I don't give my money to a money manager, let them do whatever they want with it. No, I take personal responsibility for my own money. And I've come up with a strategy that I taught my 9-year-old daughter. I created this for my 9-year-old daughter. Okay? Never buy something you don't understand or you don't want to hold long term. Okay? Never sell at a loss. Make sure there's 20 years or more of increased dividends. Make sure there's weekly options, and then make sure the numbers work. The numbers. Right over here. What am I buying it for? What am I selling it for? And what do the charts look like? Here's the high. Here's the low. Where's it going next? It is actually that simple. Okay, you know the companies I invest in. Let me go quick. All right. Let's go to a different one, a different list. Okay, here's all my lists right here. Okay, let's take a look at Warren Buffett's list. Okay, T-Mobile, Heinz Ketchup, Bank of America, General Motors, Boyd Gaming, Coca-Cola, Hewlett-Packard, Occidental Petroleum, Paramount, Mondelez, American Express, Globe Life. That's just 1 month. Okay? That's just 1 month. That's Warren Buffett's list. I'm pretty sure you've heard of almost every one of those companies. Okay? I've never heard of Boyd Gaming. But if Boyd Gaming is good enough for Warren Buffett, well, hell yeah, I'll take a look at it. I use Robinhood myself. Covered call is an option saying that the stock will go up or stay the same. Yeah, that's about right. I have options and calls. Whoops. Uh-oh, I missed that. I gotta go back. Uh-oh. I missed that question. I'm just going to see if I can find that question. Fuck. I'm sorry. I'm trying to get this question here. All right. A call is saying the stock will go up. Put saying the stock will go down. Not necessarily so, because you could do. There's so many different trading strategies. As a matter of fact, let's take a quick look. All right. All right. Now, I don't know if you guys can see this or not. See this little pop-up window here? Okay. Now, this screen behind me is live on YouTube for you to be able to see these small, little, tiny things right here. Okay. Here's all the different option strategies there are. There's single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered stock, collar, butterfly, condor, iron condor, vertical roll, collar with stock, double diagonal, unbalanced, deep and wide. And then you can isolate these ones right here. Double diagonal. Okay, double diagonal, double calendar, straddle, strangle, swap. Okay, then you go unbalanced, butterfly, condor, iron condor, vertical roll. And then down deep and wide. Check it out, deep and wide. 1 month, 1 strike, 1 month, 2 strike, blah, 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 blah. There's so many different option strategies. Why am I sticking to just this one? Well, just this one is simple, it's safe, it's predictable. It's the safest trading strategy there is. You're buying a good quality stock, you're selling somebody the right to buy it from you for the exact same price you paid for it, and you're collecting the premium. And best case scenario, you're collecting a premium that's going to be 1% or more. Worst case scenario, you end up with a good quality stock that continuously increases their dividends. That's why I like dividend stocks that continually increase their dividends. Because worst case scenario, I'm still getting higher and higher profits every single year. And that's what I'm looking for. Do you only sell covered calls? Do you have trade spreads? I love spreads, Bob. Really, I do. But in this trading strategy, in this platform, and where we are right now, you're only going to learn one thing and one thing only from me here. Okay, I'm a nice guy, but I'm really not that nice. If 50% per year is not good enough for you, I really can't help you out. It is simple, it is safe, it is predictable, it is consistent. And if it's not good enough for you, you're definitely in the wrong place. Okay? I'm retired. I don't have the time, energy, or the desire to put money into each individual stock and wait for it to go up. I don't. I want safe, predictable, consistent 1% per week. That's all I want. And I don't think it's that much to ask. I figured it out a couple of years ago, so it works, so I'm going to continue it. I'm just sharing it here for free because I'm tired of the small guy. And I am a small guy. I'm a nobody. Okay? I'm not anything. Nothing behind my name except for Senior. James Senior. That's it. Okay, I'm not a doctorate. I don't have a bachelor's degree. I'm not an accountant. I'm nothing. All right, I had a manufacturing company. They threw so much money at me, I couldn't figure what the hell to do with it. So I decided to jump in the stock market. I made a lot of money. I lost a lot of money. And I learned the hard way. I made more money in one day than most people make in a month. I've lost more money in 1 week than most people make in a year. I paid my dues. This works for me. It's simple, safe, predictable, 1% per week. It works for me. You're here, you either like it or you don't. Okay, but there are other strategies that make more money than this. But there aren't very many that are safer than this. See, that makes sense. This is a layman's term. Need act like I'm 6 years old. Well, I don't know if you'd get it at 6. My daughter was 9, she got it. Malachi does, but not with this strategy. Thank you. Okay, so you have the option of winning more, but guaranteed to hit the initial basically covered. Something to that effect, yes. Always do a stop loss so you don't lose money. All right, Corey, I'm going to disagree with you on that. Okay, now I'm assuming you weren't around in the 80s when the stop loss is created that the stock market to actually close down for the day. Seriously, look at your history books. Stop losses, computer-generated stop losses, created a situation that never happened before where the stock market closed down because of too many computers. Okay, because the stock went from here down. Okay, you're here, stop loss. Oh, wait a minute, stop loss, stop loss, stop loss. And it just kept a domino effect, kept going down, 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 down. Okay, so rule number 1, never buy something you don't want to hold long term. If you're okay with holding it, why are you putting a stop loss? Seriously, okay? If I like it, if I like ALP and I like it at 123, okay, because I'm paying 122.99. If I like it at 123, why am I putting a stop loss there? Why? You're defeating the purpose. But that's just my opinion. So theta is in your favor. Yes, theta is in my favor. However, mobile notary, okay, I don't look at the Greeks at all. Because remember, where it has to be simple, I did not want to have to explain Black-Scholes pricing method for options to my 9-year-old daughter. Okay, I'm 60 years old. It's still freaking confusing as hell. It is. There's so many ingredients to pricing an option and the fluctuation of option as the stocks move. Yeah, forget it. That's confusing as hell, even for adults. And you expect an elementary school girl to get it? Yeah, it doesn't work. Yeah, so I don't even pay attention to it. If a company consistently increases their dividends year after year after year, consistently, okay, 20 years or more, they're going to continue on doing so, which means they're a profitable company. That's it. End of story. They are a good company. So they're on my list. Now, if the option is giving me 1%, great. If the chart is telling me now's the best time to jump in, well, what am I looking for? I don't want to buy it at a high, and I don't want to buy it at a low. Okay? I want to buy it somewhere in the middle, preferably when it hits the bottom and then starts to turn around, because that's what it's going to do. It's going to go down to a certain point, and it's going to say, well, that's the lowest it's going to go, because no matter what we think, there is some point in time where there are millions of people out there looking at ALB, and they're going to say, wait a second, ALB for 120? That's crazy. So I got to change. I got to plug this phone in. There we go. Okay, so there is going to come a time. Okay, right now it's at 122. It ain't there yet. It's going to get to a point where you, me, the guy down the street say, wait a minute, ALB at 120, 118? Oh, hell yeah, I'm going to buy some. Because there is a point where we say, oh, it's worth more than that. Well, it's not there yet. As soon as it gets there, then I'll figure it out. All right. Yes, you can, as long as your broker has an app on your phone. All right. Covered means he owns the stock and he sells the money. Yep, there we go. Mobile notary, theta works in his favor. You're selling options. Yep. If you don't have the stock, it's riskier. That's true. So it doesn't kind of show the future in a way. Most discorders use a chart that way. Yeah, well, they give you a projection where they think it might be going. Okay, now I could do that, but it kind of adds more work for me. So you're absolutely right. A lot of Discord people will say, all right, well, here's this point, Fibonacci says the retracement is going to be X amount, so it should be going here within the next week. I could do that. It's too confusing, okay? I like simple, safe, predictable, okay? If the stock is at a decent price and the premium is going to give me more than 1%, okay, 30-day high, 30-day bottom, they can only be one 30-day high and they can only be one 30-day bottom. You can say whatever you want, you put whatever projections up you want. There's only one low and only one high. And when you find the 30-day bottom, it's going nowhere other than up. A 30-day high, you're going to have profit taking. Okay, you can put all the other indicators you want, but it never changes the fact. Are they paying me 1% or they're not? Okay, they're at a high, they're at a low, or they're somewhere in between. Okay, it's either bouncing off of a high or it's coming down off of a low. It's really that simple. It's either going in a certain direction or it's not going in a certain direction. Stocks only go up and they only go down. There's no other way around it. Okay, up, down, up, down. They don't go sideways. They don't go around in circles. They don't stop and wave. They don't come over to your house, they don't do anything. They go up, they go down. That's all they do. Okay, now, I'm looking at a decent company that's consistently increasing its dividends, okay? And then I want to jump in at the right time. When are they paying their dividend? Stocks have a tendency to go up before they pay their dividend. That's why I like the calendar. Okay, see the calendar? Each one of these, hold on, get rid of this. Each one of these green little dots represents when the company is paying out its dividend. So if Mondelez is paying on the 28th of June, which is week number 13 for the year, if it's paying out there, I want to buy it on the 10th, which is 2 weeks before the EX date. Because if the stock has a tendency to go up before it pays its dividend, and I jump in 2 weeks before, okay, I want to buy it on a Monday, sell some of the option, and hopefully by Friday, it hits my target. If not, I'll do it again. If it doesn't hit my target, then I'll do it again. So, okay, premium, 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 dividend. And then I'll worry about it after that. But if it's on my list, if it's on my chart, that means I've already looked at the fundamentals. I've already looked at the profit and loss statements. I've already looked at the capital income. I've looked at all that stuff, or it wouldn't be in my calendar. Okay, there's 9,520, and less than 300 actually make it to my calendar. Less than 300, because there's 300 companies that have consistently increased their dividends every single year. Not once in a while, every single year. Okay, in order to be a dividend king, which is 5 decades of increased dividends, that means every single year, year after year after year after year, higher and higher and higher for 50 consecutive years, just to make it to the Dividend Kings list. Okay, 25 years of consecutive increased dividends to make it to the Aristocrats list or the Dividend Champions list. These are the only ones I look at because they're good running profitable companies. Now, if you're not consistently increasing your dividend, you're not going to make it to my list, and I don't even want to look at it. There's less than 300 that I actually look at, me personally. Okay, so you guys give me this stuff. Okay, all this that I take a look at. 90% of it's no. 90% is no. I think in all the time I've been doing this, now I've only come live in January. Okay, so it's been over 100 days. Okay, so January, I first got approved to do a live show. All right, so since January till now, the light bulb only come on twice. Whirlpool was one of them, and there was another one. There's only 2. Twice did you guys in the audience give me something that wasn't already on my list. Twice, that was it. All right, so let's go back. Very first thing I want to look at is the dates. When are they paying the dividends? And then those are the only stocks I want to personally look at. Okay, so we are right here. So next week is the 3rd. So I want to look at the week of the 17th, 18th, 19th, 20th, 21st. So what stocks are having the dividends on that day? Well, Paramount is. Okay, what else do we have? PHM, BBY, STX. DTE, yeah, look at all these ones. Okay. And what else do we have? One more list. MRK, PHM, BBY, STK. Right, those are the only stocks I want to look at. I'm only picking up 2 stocks next week. That's it, just 2. So out of all that list I just showed you, I should have no problem whatsoever coming up with 2. All right. Next on the list, WYNN. WYNN. When? 94.80. Crap. Sorry, we got booted. Got booted. Yep, that one got booted. All 3. All 3 accounts got booted. All right, so no more looking at stocks. So we can answer questions or we can call it a day. If someone is telling you they know the future, don't trust them. I kind of believe. So it doesn't kind of show the future in a way. Most discorders use a chart that way. Yep, they do. Thank you. You're welcome. Do I SPY? No. Okay, I don't like SPY because they don't pay dividends. If they don't pay dividends for at least 20 years, I personally don't like them. All right. Do I do all this? Can I do all this from a phone? Actually, believe it or not, I do have somewhere called Google Sheets, which allows you to put all your dividend stocks into a calendar. So on your phone, with a little tiny app, it's a Google Sheets, and it'll tell you what dividends are paying their dividends this week. So you can go from there, then you can jump right over to Robinhood, put them in that way. I actually don't like Thinkorswim mobile app. It's freaking confusing as hell. Yes, if your broker has the app. Yep. All right. This approach can turn profits off, stock go up, sideways, or even a little bit down. Yep. I like it that way. Okay, if stock goes up, I make my money. Stock stays the same, I make my money. Stocks can even come down a little bit, and I'll still make my money. That's my main concern. Safe, predictable, consistent, 1% per week. You want to have a great service, yeah? All right. Tea with Marie, the attendance in live has dropped. I think it needs to refresh. Tea with Marie, I agree with you. However, every weekend, right? Every weekend, Thinkorswim does a, what do you call it, recalibration, reboot, or update. And they're being updated right now. I got tossed off of all 3 accounts. Well, 3 of my accounts. It won't show you, but can you look at patterns? Actually, there's some, MT Pockets. You want to look at patterns? Here's an awesome website for looking at patterns. We're going to look at FinViz, because I love FinViz. Okay, FinViz, check it out. The screener, very first thing I want to see. What are we up to today? Ooh, check it out. 9,522. So they added 2 more companies over the last couple of days. So last week it was 9,520. Some payers good, some bad. Yep, you're correct. Okay, so what do I want to look at? I haven't used this in a while. Map. All right, check that out. You ever check out the map? The color map. Check it out. The brighter the green, the more movement. Verizon, AT&T, T-Mobile, Comcast, Disney, UNH, EVL, XOM, CBX, PLD. That's great. Now look at the red. The deeper the red, the more it's gone down. Amazon, AVGO, NVIDIA, MU, TXM. Lost my phone again. All right, I gotta fix this tomorrow. It's on the list of things to do tomorrow. To fix that. Whoops. Sorry about that, Facebook people. I don't even think there's anybody on Facebook. All right, so that's one thing you can look at if you're looking for that kind of stuff. Or screener, index forex, blah, blah, performance ETF, blah, 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 blah. I want to look at the one that actually has maps, groups, portfolio insider, futures, forex, crypto, backtest, elite. I don't know where it is. Now, there's a way of finding one. That actually has the, I'm forgetting what I'm looking for. Yeah, it actually has patterns. Patterns. Whirlpool's up 10% this week. Good. Blah, blah, blah. That's a good dividend. Blah, blah, blah. Oops, I missed that. Wow, I'm missing some of these questions. Redeem 70. You should Google YouTube selling covered calls. Yep. It will make much sense. Yeah, that's simple. That's a good one. I'm in prison, so I do stocks here, so trying to learn more. Wow, prison talk. All right, we'll keep showing up where every night. Stop it. Which prison? I was in Lake Erie, correct? No, only 12 years. Blah blah blah. Okay. All right. I'm in Feds. Can't say where. Okay. Just started when I went. Okay. Blah blah blah. Blah blah blah. We'll use True Links. Blah blah blah. I'm trying to read all these questions. All right. Not very many questions. A lot of statements. They don't let us use the phones. We just got them. Blah blah blah. Next prez might be in the joint. Yeah, you never know. But illegal, yes, blah, 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 blah. Have you tried making any bots to do this automatically for you? You know, I get approached by bot makers all the time. I'm old school. I don't trust bots. All right. I actually write shit down. Right? You see my books. You'll see me carrying books around a lot. I actually write stuff down. Many times if I hit the wrong button and everything disappeared on me. Yeah, so I don't do that. 12 years inflation. Okay. Right. He does not. He does it manually. Yep. AI aspect does seem promising for stocks. Yeah. What stocks you're in this week? We'll get to that in a second, Brian. I can't seem to find any good info on bot trading or using Thinkorswim code to automate things. I haven't figured that out either. I have no desire to use a bot whatsoever. Okay, now you've heard me say it many times. I don't like ETFs. I don't want a computer having access to my money. I want to be able to do it myself. It is your money. Take responsibility of it. You want to hand it over to a computer? Go ahead. I don't do that. You can back test everything it's talking about to check the strategy. Yes, you can. I have been trading SPY lately. Okay, good for you. I don't do that. Follow Nancy Pelosi's trades. Yeah, I don't do it either. You know, that's what do they call that? Fruit from the poisonous tree? Yeah, no thanks. It may be money, but getting it that way, no thanks. I'd rather do my own work. I'd rather take my own responsibility. Is arbitration something you have experience with? That's what I think I'm doing. Still learning. All right, Austin. Yeah. All right. I was looking for something specific in here because they used to have groups. No, I don't think it'd be groups. No. Portfolio. Nope. Insider. Oh, yeah. Look at that. Insider trading. You want to see insider trading? There you go. Who's got 28,000 shares? 28,000 shares. 175,000 shares. Who is that? ACNT, Private Fund Management. Wow. Oh, here's one right here. CENT, William Brown, Chairman. 700,000 shares for 25 million. You know, there's a lot of information out there. It all depends on what you want and what you're looking for. Me, I like 10 minutes a day. 10 to 15 minutes a day, I'm in, I'm out. You know, it's relatively that easy. Okay? Okay, we're going to call it quits because, one, it's 20 of 12. We're way past 11:30. Two, we got booted. Okay, nothing there. Okay, so that's one of the bad things about Thinkorswim. They do update it every week. Hope your wife is doing well. She has her last doctor's appointment is on the 11th, so we'll wait and hear what happens. Trenton, do you ever roll a call the next week and lock in another 1%? Sometimes I do. What time are you always on? 9 p.m. to 11:30. Thank you. Have a great night. Is she still in Boston? Yes, she's still in Boston. All right, so you guys, we're going to call it quits. We're going to do this again tomorrow night, and hopefully Thinkorswim will be up and running by then. So you guys have a great night, and we'll be calling it a day. Wow, this one's overheating. Okay, Facebook, you're done. Finish. Home. Ending broadcast. There we go. Okay, that one's good. That one's done. Catch you guys later. And catch you guys later. And catch you guys later, you guys here on YouTube. Investing in dividend stocks for a safe, predictable, consistent 1% per week using what's called a covered call for a safe, predictable, and consistent 1% per week.
Beginning July 1st, 2024, the program is allowing homeowners to choose any licensed Florida contractor to make important retrofit upgrades to their homes. No more authorized contractor lists to mess with. Now it's up to each homeowner to find and manage their own contractor in the open marketplace, which should lead to increased competition and better pricing. Next, in order to process the reimbursement with one set of rules, all grant dollars will be paid directly to the Florida homeowner for them to distribute, including low-income grants. And finally, there will be a new application process for grants using a tiered approach to prioritize low and moderate income Floridians who are 60 and older. Here's a quick look at that breakdown. Low-income homeowners who are 60 and older may apply first, followed by low-income homeowners. Then moderate income homeowners who are 60 and older go next, followed by moderate income homeowners. And then all eligible Florida homeowners may apply. I'm Elizabeth Hart for the My Safe Florida Home Program. In 2022, the Florida Legislature funded the My Safe Florida Home Program to help homeowners strengthen their homes against storms and save money on their home insurance premiums. And now, the My Safe Florida Home Program is the largest and most successful program of its kind in the country. Under the leadership of Florida's CFO, Jimmy Patronis, and the Department of Financial Services, the My Safe Florida Home Program has had incredible success. Since launching in late November of 2022, the program has completed over 100,000 free home wind mitigation inspections, approved over 38,000 grants to strengthen homes, and allocated over $385 million in state funds to eligible Florida homeowners. What's more, many Floridians have saved almost $1,000 on their annual home insurance premiums. Strengthening homes to gain discounts on the wind mitigation portion of home insurance premiums is a proven path to saving money on insurance costs for Florida homeowners. Be sure to always share your latest wind mitigation inspection report with your insurance carrier and speak with them about the things you can do to strengthen your home and save money. So what does the My Safe Florida Home Program have planned for this coming year? Well, first, beginning July 1st, 2024, the program is allowing homeowners to choose any licensed Florida contractor to make important retrofit upgrades to their homes. No more authorized contractor lists to mess with. Now it's up to each homeowner to find and manage their own contractor in the open marketplace, which should lead to increased competition and better pricing. Next, in order to process the reimbursement with one set of rules, all grant dollars will be paid directly to the Florida homeowner for them to distribute, including low-income grants. And finally, there will be a new application process for grants using a tiered approach to prioritize low and moderate income Floridians who are 60 and older. Here's a quick look at that breakdown. Low-income homeowners who are 60 and older may apply first, followed by low-income homeowners. Then moderate income homeowners who are 60 and older go next, followed by moderate income homeowners. And then all eligible Florida homeowners may apply. The My Safe Florida Home Program will reopen July 1st when new state funding becomes available. Look for details about the latest program changes and income definitions online at mysafeflhome.com in the very near future. 2024-25 will be another big year for the My Safe Florida Home Program. We're on a mission to help Florida homeowners strengthen their homes against hurricanes and save money on their insurance. Stronger homes, safer Florida.
National Convention. Great honor. Thank you. Well, thank you very much, everybody, and thank you, Angela, for that introduction. And I am truly honored to be invited here tonight as the first president in American history to address the Libertarian National Convention. Great honor. A lot of people ask why I came to speak at this Libertarian Convention, and you know, it's an interesting question, isn't it? But we're gonna have a lot of fun. Well, in the last year, I've been indicted by the government on 91 different things. So if I wasn't a libertarian before, I sure as hell am a libertarian now. And unlike Joe Biden, I don't throw people in jail for disagreeing with me. I don't do that. I want to thank some people that have been really outstanding, and they are great libertarians and great people. Ambassador Rick Grinnell, Senator Mike Lee, Kash Patel, and Senate candidate who's going to win from Virginia, Hung Cao.
On October 19, 2023, Wells Fargo warned its clients that all checking accounts are likely to be replaced.
Hey guys, Joby Mathis here, and today we're going to dive into the 5 most critical investment accounts you can have. And so we're going to really be diving into understanding financial matters, and it's critical that you understand how to organize your money. So I'm going to reveal those 5 must-have accounts that are the building blocks of a solid financial foundation. So stay tuned. We're going to dive in. Ready? Number 1, your checking account. Surprise, surprise. It's your everyday go-to account for managing money. It's where your income lands, and it's where your day-to-day expenses are paid, but it's really just a convenience. But it's not where your money grows. This is not where we want to stockpile our cash. So really here, what we're doing here is putting in about 3 months of money. We do not want to miss opportunities. In fact, tops 3 months. And why? Because you're making nothing on that money. It's literally melting. So not only are you not making money on your money, spoiler alert, the bank is, but inflation is making the value of your money go down. So the same with cash. Just stop hoarding it, right? Thinking of your great grandpa who saved a fortune at the time, $50,000 under his mattress, would have bought 3 houses. Now it wouldn't even cover the down payment on a house, on a median home. So yeah, your money is being depleted if you leave it in a checking account. Not to mention, there's only $250,000 FDIC insurance. It's not the safest place to start stockpiling cash. So it's going to be our convenient account. And everybody needs to have one, but understand you're keeping it fairly bare, 3 months of expenses. Number 2, the savings account. Now, these are becoming more important now because interest rates are higher. When the interest rates go down, they go down. But just kind of think of it as a safety net. It's critical for emergencies, short-term saving goals, and while it doesn't offer significant growth, it's accessible and the security it provides really are unbeatable. Aim for about 3 to 6 months worth of expenses here. Just remember that traditional banks absolutely love to rip you off when they're dealing with savings accounts, and they might give you like 0.5%. So make sure you're looking at the high yield savings options. Usually right now it's 4 to 5%. Inflation has been pretty high as of recent. So depending on when you're listening to this, what happens is the Fed rate goes up. So the interest rates that the banks can give you go up. When they go down, it also goes down. And so you're just going to want to shop around and look for a high yield savings account. But a traditional bank might give you 0.5%. So you got to be looking around. Again, right now, you're probably looking closer to 4.5%, 5.5%. It depends on really what the Federal Reserve is doing because the interest rates do fluctuate. And you just remember, with low inflation, probably is going to come lower interest. Higher inflation equals higher interest. But that's the point. We just don't want our money melting. And if the interest rate's really high, if the federal rate of inflation is high, if the rate of the CPI is high, then the Fed's going to start to combat it as well. But usually interest rates are high at that time. And then they're like, oh my gosh, it's really high. So we're going to keep raising interest rates until they start going low, and then they're going to lower. But here's the thing. Checking and savings both come with $250,000 FDIC insurance in case the bank fails. And we have had bank failures as of recent. So it's important not to have too much money. Again, I'm looking at about a max of 6 months expenses, 6 to 9 between the two. Realistically, with the savings, maybe max of 6 months of expenses. And that leads us to where we really should be building, our wealth, and that's an investment account. So that's number 3, is investment accounts. And these are more exciting waters, obviously, because this is where your money starts working for you, offering growth through stocks, bonds, mutual funds, ETFs, and more. But remember, with higher rewards come higher risks. So it's vital to approach this with knowledge and a fair degree of caution. Let's start with the brokerage account. Think Schwab, Fidelity, Robinhood, Raymond James, Morgan Stanley. There are a ton. And there's something called a money market fund that you could absolutely put money into. It's kind of like a big old mutual fund. It's going to make a little bit more than your friend, the savings account. And here's the thing. Even with brokerage accounts, they have a different type of coverage, SIPC, which usually is about $500,000 of coverage, and it can go up to $1 million depending on which institution. I think like Schwab, for example, has $1 million. They have additional insurance in case there's failure. But here's the thing about brokerage accounts and investment accounts. Realistically, it's your money. It's just, it's kind of like this. Let's say that you had a large garage, and you gave your car keys to an attendant who then took it into the garage and parked it in with all the other cars, and it got intermingled, and you might get your car back or you might get somebody else's car. At the end of the day, it became the parking lot's car versus, hey, I have my own garage. And in a investment institution where they're just trusteeing your money, you have your own garage. Or better yet, let me give you a better example. If you went into a bank and you had a safety deposit box, that's your money. That whatever you put in there is yours. They're just helping oversee it. That's really what's going on at an investment institution when you're doing a Schwab or Fidelity or one of these others. You have your own account. So when you have these types of coverage, FDIC and SIPC, I kind of think of it on the investment side as not being totally necessary. And the reason being is because unless you're dealing with somebody like a Bernie Madoff, where it's just crazy, where they were self-trusteeing, most institutions have a third-party trustee. Your money's fairly safe. If the institution goes bankrupt, for example, you have shares in your name 99.9% of that time, right? Where you actually have your own investments, and it's not something that's all mixed up. So I kind of look at it and say it's not the same thing when we're comparing a savings and a checking to an investment like a brokerage account, because it's really different. But here's what we're doing. We're combining kind of the power of both the checking and the savings in a money market fund. There's going to be a debit card, check writing abilities on many of these accounts, but you're going to be earning a slightly higher rate, which it's also going to require probably a slightly higher balance. But the key here is that we want to break away from the traditional bank and invest in a brokerage account. And money market accounts are great. I'm going to call it a money market fund because there are some money market accounts at banks too. The vernacular gets mixed up. I always think of money market. I think of financial institutions like brokerage houses, but I believe that they might have a cohort over there in the banking world, although I don't use that. But what we want is a little bit better return as a default than a savings, but we want to be able to put it into things like stocks, bonds, ETFs, mutual funds, or other investments. And if you don't know what you're doing on that side, I'll put a link down here to infinityinvesting.com where we teach this information. It's a free basic account. You can learn about investing, how to open an account, and all that fun stuff. And we have a free membership, by the way, so you don't have to worry about coming out of pocket. You'll learn about things like the stock market. You'll learn about investing, and you'll learn really kind of the principles behind it, because if you're just getting started, ETFs are probably the way to go. Just get SPY. I have a ETF that I like. That's Kevin Simpson, who does a really good job of covered calls in his ETF called DIVO. But it's entirely up to you. I will say that you should pay attention, but it's entirely up to you. I will say that you should just get SPY. I have a ETF that I like. That's Kevin Simpson, who does a really good job of covered calls in his ETF called DIVO. But it's entirely up to you. I will say that you should.
We've all found ourselves in conversation and felt attacked. Like, we started off talking about one thing, and then the other person twisted our words, and before we knew it, we lost our cool, lost respect in their eyes, and maybe even acted like a jerk. Now, I don't normally do the same person twice in a row, but this interview between Cathy Newman and Jordan Peterson was just too interesting of an opportunity to discuss how you can handle someone who uses subtle conversational tricks to bully you into looking dumb. So in this video, you're going to see firsthand some of the most common tricks that people might be using on you, and you're also going to learn how to reverse those so that you can walk out of a kind of aggressive situation having earned more respect than you had going in. So first off, to stop a conversational bully, you have to realize what's going on before it's too late. Now, typically a person will reveal their aggressive attitude early on with their tone of voice and their word choice, kind of like this.
But it's not, I wasn't specifically aiming this message at young men to begin with. It just kind of turned out that way.
And it's mostly, you admit, it's mostly men listening.
In this case, Cathy is indicating very clearly that she thinks Jordan has done something wrong. Otherwise, why would she use the word admit? She makes her stance clear a moment later when she implies that he should be bothered for being divisive. Just watch.
Does it bother you that your audience is predominantly male? Isn't that a bit divisive?
The point here is that even when they're being passive-aggressive, people will often indicate that they're about to attack you before they actually do. So if you hear someone say something like, well, what do you have to say for yourself? Be prepared. That person thinks that you've done something wrong, and you need to be very careful what you say next. Not because you did do something wrong, but because a conversational bully may be trying to trap you into saying something that you disagree with so that they can attack that straw man. And the first way that this often happens is called the "so you're saying" trap. Here's what it looks like.
So you're saying women have some sort of duty to sort of help fix the crisis of masculinity?
Which
women
domination.
want to dominate. Is that what you're saying?
No,
right. So you're saying that anyone who believes in equality, whether you call them feminists, call them whatever you want to call them, should basically give up because it ain't going to happen. Let me just get this straight. You're saying that we should organize our societies along the lines of the lobsters.
The general pattern here is that someone says, so you're saying, and then proceeds to oversimplify or mischaracterize what you actually said. I won't spend too long here because it's very easy to spot and it's rather simple to avoid and get around by saying, well, actually what I was saying is, and then repeat yourself.
Along the lines of the lobsters.
I'm saying that it's inevitable that there will be continuity in the way that animals and human beings organize their structures.
But there's a much sneakier way that people may mischaracterize your beliefs and then attack them. Basically, it's when someone's words imply that you believe something you don't, and they don't actually say it. So in business, they call this assuming the sale. Like when a car salesman says, so would you like that with the leather interior or with the fabric interior, before you've even decided to buy the car. Now, with a several $1,000 purchase, you're likely to notice this and say, whoa, 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 who said I was buying in the first place? But it's very likely that this is happening to you in conversation all the time and you don't even notice. Here's how it might look.
Yeah, but those reasons, why should women put up with those reasons?
Embedded in the question, why should women put up with it, are several important presuppositions, namely, one, that there is something to put up with, and two, that Jordan thinks women should put up with it. Now, the trap here for Jordan would be to answer Cathy's question directly, and many of us fall into it in similar situations. Then we start arguing for things that we don't even really believe, just out of habit. Instead, you need to identify that hidden presupposition and then call it out. So watch how carefully Jordan listens to Cathy's questions so that he can catch what she's not saying.
Why should women be content
I'm not
not
saying
to
that
get
they
to
should
the top?
put up with it. I'm saying that the claim...
Here's another example of assuming the sale from later in that conversation. See if you can spot the hidden presupposition and ask yourself what you might say to respond to it.
Which women do a lot of.
But why shouldn't women have the right to choose not to have children?
So what's the hidden presupposition? That Jordan thinks women must have children. And of course, he defends a woman's right to make any decision about that she wants.
The right to choose those demanding careers.
They do. They can. Yeah, that's fine.
But you're saying that makes them unhappy.
Here's one more example. See if you can spot the hidden presupposition here.
So you're not going to say to your followers now, quit the abuse, quit the anger.
Did you catch it? The presupposition is that Jordan's followers are abusing people. Now, he can't answer that question directly. He has to address that hidden point first, and he does.
Well, we'd need some substantial examples of the abuse and the anger before I could detail that question.
There's a lot of it out there.
When I cut the clips like this, it makes it very easy to see these hidden presuppositions, but in real time this can be difficult. One simple thing that you can do to make it easier on yourself is to purposely assume a relaxed posture, as Jordan does throughout this entire conversation. Now, this posture actually helps you to think less frantically because your body is signaling to your brain that everything is okay, you're in control. You will also want to give yourself some time to pause after each question, which Jordan definitely does. In addition, you're going to want to study up on frames and frame games, because there's clearly a whole level of conversation that is going on behind the words. Now, I've talked about this in other videos, specifically the one on Tyrion Lannister from Game of Thrones, and I'll leave a link to that in the description if you want to check it out. Moving along though, the last clip contains a small example of the third conversational bully tactic in this video, which I'm naming the smash technique. Take a look.
So you're not going to say to your followers now, quit the abuse, quit the anger.
It's subtle here, but Kathy smashes together two very different terms, abuse and anger. Now, by ending on anger, it'd be easier for Jordan to just forget it and answer the question, but that would tacitly accept that his followers were abusing people. That's why the smash technique is so frustrating. People are embedding hidden statements that you actually disagree with and then moving through them before you have the time to voice that disagreement. You may also have seen people barrage you with questions just to overwhelm you into having to accept their points like this.
Otherwise, why would there only be 7 women running FTSE 100 companies in the UK? Why would there still be a pay gap, which we've discussed at length? Why are women at the BBC saying that they're getting paid illegally less than men?
It can be easy to get overwhelmed and to lose focus as you try to answer all of these questions, but with the smash technique in general, the best policy is to slow down the tempo of conversation and tackle one question or one point at a time.
Do the same job. That's not fair, is it?
Let's go to the first question. Those are complicated questions.
So hopefully now you're more aware of the "so you're saying" trap when people assume the sale, and of course the smash technique. This moves us to the second section of this video, which is how to persuade someone in these kinds of situations. And I will say, it seems to me that it doesn't look like Jordan is necessarily trying to change Kathy's mind, but simply to debate in front of an audience. There are still some valuable tips to be gleaned from this video and a few things that I'd add. First, do not strawman the other person's ideas, even if they're doing it to you. And to be clear, I don't know if I mentioned this, strawmanning is when you create a caricature of their ideas and then attack those rather than what they truly believe. Instead, show the other person that you are truly engaging in their real points. Attempt to understand them. And sometimes this means that you have to ask them to repeat themselves so that you can.
Seven women, repeat that one. There's
7 women running the top FTSE 100 companies in the UK.
Okay. Well, the first question might be,
after you've made an honest attempt to understand them, you need to make sure that they can understand you, which is necessary for persuasion. And to do that, you often have to use visual imagery. For instance, here's a very abstract point without any images that Jordan makes.
that it's inevitable that there will be continuity in the way that animals and human beings organize their structures. It's absolutely inevitable. And there is 1/3 of a billion years of evolutionary history behind that.
Now, maybe you can understand that, but it kind of lacks any emotional oomph. But notice how the addition of a concrete example makes that 1/3 of a billion years just feel different.
Right? That's so long that 1/3 of a billion years ago, there weren't even trees. It's a long time.
So adding concrete examples, especially ones that people can easily imagine, is a smart, persuasive move. And lastly, when you're arguing, oftentimes the best way to get someone to change their position is not by changing their mind, but by gently showing them that they're already agreeing with you. I talk about this in the frame video, but here's an example from this interview.
Why should your right to freedom of speech trump a trans person's right not to be offended?
Because in order to be able to think, you have to risk being offensive. I mean, look at the conversation we're having right now. You know, like, you're certainly willing to risk offending me in the pursuit of truth. Why should you have the right to do that? It's been rather uncomfortable.
This is huge. Jordan is no longer arguing that her point is wrong. He's arguing that she already agrees with him. Her behavior and her previous statements demonstrate that she cares more about free speech than not offending people. And then Jordan doesn't try to make this point wrong. He shows her how they're actually very much in alignment.
You're doing what you should do, which is digging a bit to see what the hell's going on. And that is what you should do. But you're exercising your freedom of speech to certainly risk offending me. And that's fine. I think more power to you as far as I'm concerned.
And then, of course, Kathy feels stumped because she does actually agree with Jordan and she's proven it herself. People have a strong desire to remain consistent with things they've already said and done, so oftentimes this becomes one of the few ways to persuade someone who's really dug in their heels. You're basically showing them that they don't have to move in order to agree with you. They already do right where they're dug in. And then, of course, Jordan hits her with the gotcha.
There, and I'm just trying to work that out. I mean,
Ha, gotcha.
you have got me. You have got.
Now, even though I laughed at that phrase at the time I was watching the interview, I have to say that last bit, gotcha, does not improve Jordan's persuasive case. It actually makes Kathy feel silly and wrong, as opposed to happy to discover that she and Jordan are really on the same team all along. And if I had to give one last point of constructive criticism, it would be that Jordan answered all of Kathy's questions rather than trying to proactively address her deeper, unstated emotional concern. And in my opinion, that emotional concern is that Jordan is her enemy, that if he believes something, it must be against her interests. If Jordan could have found that and pointed to a more common ground that they share, which we all of course have, I don't think the interview would have continued in such an argumentative fashion. But Jordan's role isn't necessarily to convince Kathy Newman of anything, it's to debate for an audience and to promote his book, which I think he did at an A+ level. If you think that I missed something or you just want to discuss, leave a comment below. I'm actually going to be checking periodically, but I will be most active in the comments for that first hour after the video goes live, which is now 2 p.m. Eastern on Mondays.
We've all had conversations that started out friendly, then suddenly turned into an argument that made us feel attacked. The other person twists your words and uses little tricks to try to make you look dumb. So today, we're going to break down a conversation just like that between Andrew Tate and Piers Morgan to show you how to defend yourself in any argument, even if the other person is determined to make you look bad.
I don't know why you're trying to come at me with one of his views and pretend that's something to do with me.
Because it's a pretty big view.
No, but it's a lame trick, Piers.
This video is not endorsing either of these people. It's simply an analysis to teach you the tactics some people use to assert dominance in an argument. The first step to defending yourself from a conversational bully is to spot when they enter fight mode. There's some obvious tells, like if someone starts shouting or repeatedly cutting you off, but there's a subtler tell as well. You can see an example of it in this next clip, where Piers shows he's there to argue with Andrew, not to understand him.
I want to play you just a clip off the top. This is from Joe Rogan, who's somebody I absolutely love.
Sure.
And I think it explains to me what I presume my issue with you is going to be, right?
Correct.
And you have absolutely got the right to try and persuade me otherwise.
Sure.
There's actually two tells here. If someone labels you or an idea you stand by as an issue or problematic, that's a good indicator that they've switched into fight mode. Or if they want to argue with you before asking you to explain your point of view. If that happens, you should start being wary of conversational traps. One of the most common traps is misquoting you. Misquoting you makes it easier for the other person to feel like they're dominating you because they're attacking a straw man instead of your actual views. This sounds like it would be easy to catch, but sometimes it only takes a small tweak to your words to make a big impact on their meaning. If you aren't paying attention, you may not notice the small tweak. For example, listen to Andrew respond when Piers asks him, "What is your opinion of Alex Jones after meeting him?"
He was professional and courteous to me. When I meet somebody and they show me respect, I show them back. Respect. That's what I do, as I did with you.
You respect him?
If somebody shows me respect, I show them respect back.
So if Adolf Hitler showed you respect, you'd respect him back.
There is a huge difference between showing someone respect by being polite versus having respect for them and their ideas. Andrew even catches this at first, but Piers is persistent in establishing that straw man.
Well, I'm not. I'm taking your position that if somebody shows you respect them.
I think that...
I'm saying there are lots of people in the world I do not respect. If Vladimir Putin showed me respect, I would not respect him.
That's your opinion. But
no, it's my view. What's your
that's
view?
Your view. Well, your
view is you would.
You can see Piers is trying to force a view upon Andrew that he doesn't actually believe. So you have to be careful not to let someone misquote you, or you may find yourself defending a belief that upon reflection you don't even have. Luckily, there is a simple solution for this if you're aware of it. Reestablish your own point of view before you defend it.
You talk about people don't want to see men dressed up in dresses, transgender.
That's not exactly what I said.
What did you say?
I said the reason I am so popular and I'm so famous is that there's a large contingent of men who don't want to wear makeup, who still want to make money, go to the gym, be strong, drive a fast car, be traditionally masculine, and don't want to be shamed for that, and they don't want to be called toxic for that.
Now, if you do start to make good points in an argument, you'll have to watch out for this next trick, derailing interruptions. This is when someone tries to interrupt you before you can establish your strongest points.
You're taking these sentences and on repeat, you're using you're weaponizing them against me.
I'm not weaponizing anything.
Okay, it's fine.
No. You're weaponizing the weaponizing, which doesn't exist.
No problem.
You said to me, come on, bring it on.
This can be frustrating. You see in that clip that the interruptions are starting to bother Andrew. Luckily, there's 3 ways you can handle being interrupted. The first trick is to pause, acknowledge the person, then return to the point you were making.
All I've done is literally read out all the things we identified from all the research that I thought were blatantly misogynist.
Understood.
And giving you the chance to respond. And the only time I've interrupted you is when you've tried to answer a completely different question.
Understood, Piers. But these things were said.
Andrew reclaims the conversation after he looks Piers in the eye and says, "Understood, Piers." You can even see a little smile in Piers' eyes after. That's because most people in an argument crave to feel heard and understood. Here's another example. You can steal this line word for word if you want to acknowledge someone without agreeing with them. This time, Piers even makes a little positive noise after Andrew acknowledges him.
I don't think so.
I think your view of that is dangerous.
I respect that you think my view is dangerous, and I respect you have the right to view that, to think that.
That line is a nice way to remain connected with someone without giving ground you don't agree with. It makes the other person feel heard, and that disarms their need to attack. Now, once someone has established a pattern of interrupting you, the next thing you can do is preempt their interruption. Here's an example.
And this is actually what's interesting. And please don't interrupt me on this point. Social media has changed in modern times.
You can even see Piers' body language change as he disengages to respect Andrew's request. If the person continues to interrupt you, you can call it out with a one-finger stop gesture.
No, let's stop for a second. Please don't interrupt me. Here's why I know why you're good at your job. First, you interrupt people a lot, which is good. It's a good skill. I believe in marriage more than anybody. In fact, I believe in marriage I believe in marriage in the traditional sense.
Now, on the flip side, you also want to avoid the trap of being the interrupter, especially if someone is responding to a point you've made. Don't steamroll concessions. There were a few times where Piers actually made a good point, but he interrupts so much that Andrew can't even agree with him.
But you did say at the start of this little exchange, you said, I wouldn't maybe say things the same way now that I did before I was famous. And yet, actually, you've doubled down and said exactly the same thing.
On certain points.
So that is what you believe. That's my point.
Yes.
I'm trying to work out, look, I don't know you. We've just met, right?
Yeah.
Steamrolling concessions prevents you from reaching common ground with the person you're talking to. If there's anyone else listening, it also makes it harder for them to register that you've made a good point. Here's one more example so you can see what not to do.
Well, I think my sister is her husband's property, yes.
Because fundamentally, I don't believe a man owns a woman. You do.
Well, I don't think a man owns any sovereign individual. I don't think we live in the world of slavery. I don't own any men or any woman.
Right.
Nobody owns
When
anybody.
you use phrases like property, that's what you imply.
I understand.
And so my point again is, you're a smart guy.
We start to interrupt people when we are the ones that enter fight mode. If you can stay calm in an argument, you're much less likely to cut people off and steamroll concessions. One great trick for staying calm in an argument is to physically relax into the argument. Purposefully release any tense muscles and take deep belly breaths. This will signal to your brain that you are safe and you don't need to enter fight or flight. Staying calm also lets you think more clearly, so you're more likely to catch any logical gaps that the person tries to sneak by you. Like the name suggests, this is a moment where there is a gap in the logic of their argument. Here's the most obvious example from this conversation.
What is your view of Alex Jones?
I think that Alex Jones is a sovereign individual who, very much like the rabid left, deserves a chance to speak on his points of view. I think that the truth on issues is usually somewhere in the middle between two extremes. And
So you think Sandy Hook was staged?
The logical leap from the truth is somewhere in the middle to so you think Sandy Hook was staged is obvious, but not every logic gap is as easy to pick up on in real time. The key is to remember the premise of someone's argument. This is easy to do if we break things down a little. For example, take a listen to Piers here.
There was also, I think, quite a disturbing piece that BuzzFeed did. And it talked about the negative impact of young, impressionable male minds when they've read or seen some of the more inflammatory things you've said.
What is the premise of Piers' argument? It's that Andrew is dangerous because of his impact on impressionable young minds. Now listen to what Piers says immediately after that.
And they quoted, for example, Sandy, 22 from Washington. My father's gone from a man who minored in women's studies in college, who was kind and in touch with his emotions, treated all people, men and women around him, with kindness, to a man who says that whenever he sees an effeminate male stranger, he gets an overwhelming urge to murder them.
Did you catch the gap in the argument?
Did you say that my father went? She said, my father has gone.
Her father.
That's a full-grown man, firstly. So we're talking about my impact on children. You just talked about a full-grown man here.
Now, so far, we've discussed how to engage with someone who's being combative, but sometimes an argument goes into an area you're not comfortable with and you don't want to engage with them at all. When that happens, you have every right to draw a conversational boundary. For example, watch Piers try to get Andrew to share about his personal life.
Have you ever been in love?
Yeah.
How many times?
Plenty. I believe in love between men and women.
A real love, where it's...
Yeah. I believe.
How many times would you say?
Enough.
Andrew tries to move on, but Piers circles back a few seconds later.
How many women have you loved?
I don't know, Piers. A few.
Give me a ballpark. 5, 10, 20?
Let's say...
You don't forget how many people you've been in love with.
It's a strange line of questioning, and Piers just will not give it up. So finally, listen to Andrew draw a boundary.
I believe in family. I believe in children. I believe in...
If you believe in family and children and love, why are you single?
I'm not single.
Well, you're not married. That's what I mean.
Well, if I was married, the last thing I would do is advertise it to the feral psychopaths on the internet.
Most people aren't comfortable being that direct, so they try to change the topic indirectly. It's much more effective to simply draw a boundary and let someone know that a topic is off limits. That doesn't mean you have to shout or get confrontational. It can be as simple as saying, I'm not comfortable talking about that. So now you know how to see and avoid some common conversational traps when things get heated. But how do you turn things around and get back to a friendly, positive conversation? One way is to purposefully acknowledge any common ground. For example, there was a moment in the conversation when Andrew was talking about getting deplatformed from social media, and he starts to lose his cool. Listen to how Piers gets him out of fight mode by establishing common ground.
When they attacked me, they lump a whole bunch of things in together. They say misogynistic, racist, transphobic. They just put them all together at random. I'm mixed race.
By the way,
I don't know where they get these. They just get these buzzwords and put them in a sentence.
By the way, I completely agree.
It's crazy.
And I've had the same thing done to me.
Okay,
and I'm not calling you anything. I'm asking you what you personally believe you are.
The important thing here is that you are genuine, and that comes not just in your words, but in your tone of voice. Listen to Piers here for a good example.
A lot of what you say, I agree with.
Yeah.
Right? I do, genuinely. I've read a lot of stuff you said. A lot of the stuff you talk about, I think, yeah, he's got a good point, right? So we agree about a lot of things. But when I read that kind of thing, I'm like, how much of that is you? How much of that is some act? Do you regret saying stuff like this?
Now, our final advice today is actually something you won't see in the conversation with Piers and Andrew, and its absence is one of the biggest reasons that the conversation was so combative and so unproductive. Give yourself permission to change your mind. This is something Andrew seems to view as a bad thing. You can hear him talk about it here.
That's why I've repeatedly asked you about that line to see if you've changed your position, but the reality is you haven't.
It's not about changing positions. I'm a full-grown adult and I stick by the things I say and I'm responsible for them.
If you view changing your mind as a bad thing, a sign of weakness, or being a flip-flopper, then of course you'll never change your mind. Or even when you do, you'll do what Andrew does and try to make all the things you've said in the past fit your new beliefs. For building fame online, maybe that's what's required. Andrew is certainly world-class at getting famous. But in your own life, give yourself the gift of permission to change your opinion, to say that you don't agree with everything your past self thought. That freedom will allow you to be happier and to grow. Now, publicly changing your mind is much easier said than done. It takes confidence to change your opinion in front of other people. If confidence is something you struggle with, you may like our course Charisma University. It's a step-by-step 30-day video series that comes with a daily action guide to show you exactly what to do each day to take your charisma and confidence to the next level. And if for whatever reason you don't, then you can get a full refund just by pushing a button inside the course. Thousands of people have gone through Charisma University so far and had great results. Here's what just a few of them have said. My biggest breakthrough has been gaining more confidence. If you knew me a year ago, you'd see a socially awkward guy. But that same guy had hidden confidence and charisma that has now been unleashed. If you're reading this or listening right now, think about who you want to be.
We often think that getting respect and being aggressive go hand in hand, because unfortunately it's often the bully that gets the most respect in the schoolyard and even in the workplace. But Jordan Peterson is an exemplar of a different way to generate massive amounts of respect. So in this video, we're going to explore 3 main things that he does that force people to respect you without being a bully.
But you can't force me to respect you. It's just not possible.
Okay, maybe not force, but perhaps make people much more likely to respect you. So let's dive into it. The first thing that Dr. Peterson does is called pacing your reality. So even when he doesn't share your beliefs, he shows that he can understand why you might think the things that you do. For instance, Jordan is religious, but listen to how he speaks about atheism.
There's a good case to be made for atheism. I mean, let's make no bones about it. Because you could say, in some sense, there's been 300, 400 years of brilliant scientists who've been doing nothing but laying the foundation for an objective, empirical atheism.
Jordan grants that the side that he does not agree with has really strong points in his favor. And this might sound counterproductive if you're trying to persuade someone, but it actually makes people more open to changing their mind. Because in any discussion, the absolute hardest thing to do is to admit that you might be wrong and risk appearing dumb. That's why sometimes saying things like, hey, you raise a great point, or I totally see why you see things that way is so important if you find yourself in a heated argument. It lets the other person not feel dumb if they wind up changing their mind. This is how Dr. Peterson can get people to open up to his views without having to push them around. You can contrast that with the standard political discussion where 2 sides basically just yell their points of view at one another like in this clip. hard.
If you work hard, if you get educated, if you're an honest person, you can make it in America.
If you live in a neighborhood where poverty is endemic, it's harder to work hard. It's harder to get an education.
Hey, it was harder for me.
No one changes their mind from a discussion like this. So even though it might be tempting to quote unquote win an argument by making really incisive points that make the other person look dumb, you have to recognize that it actually makes them less likely to change their behavior if you don't also validate something about their position. Now, interestingly, Jordan peppers in many instances of mini pacings into his normal speech. For instance, he mentions what you might be thinking while he's saying things. Just watch.
To those who have everything, more will be given, and from those who have nothing, everything will be taken. It's really a vicious statement. But what it means is, as you go downhill faster and faster. For working with old people in old age homes, and the rule is don't do anything for the residents that they can do themselves. You think, well, that's pretty harsh. It's like, no, it isn't. You're helping them retain their independence. Then he stretches out and he'll go fight again. So antidepressants work on lobsters. Right. And you think, well, who cares? It's like, no.
Jordan will even raise a hypothetical question that you might have and then answer it.
And the idea is that if you can do that, you will transcend the tragedy. And it's like, well, could that be true? Well, most people admire tough, competent people, so you know it's at least a little bit true.
What's especially fascinating is that once Dr. Peterson has completely reversed your initial position, he's extra careful to not make you feel stupid about it. The other person needs to be able to save face, so he mentions one more time that he's not attacking.
I mean, I get your point, and I'm not trying to denigrate it in any sense. There's a complex issue here.
That's partially why so many people have had their minds changed by Dr. Peterson. He's not trying to make them feel dumb, he's trying to help them, to educate them. Contrast that with the quote-unquote own compilations on YouTube, where one person tries to make the opposing side and the opposing argument seem as stupid as possible.
Be the same. They're against Mexicans, they're against Jews, they're against black people, they're against minorities.
Where are all these Nazis?
Everywhere.
Oh, let's do a quick pan. And let's see them. No, there's one. No. Okay, so there's none here, so where are they?
Which sometimes results in this.
It's not the same.
You're right. You're 100% right. It's not the same.
America unsafe, okay?
You don't have to cry. I know it's hard. No, look, come here, honestly.
It can be tempting to laugh when your side gets one up on someone from the other side. But when you make people feel stupid, nobody actually changes their mind. And while it might feel like you're a winner, you're actually completely ineffective at changing behavior. So if your goal is to make the world a better place, be like Dr. Peterson. Do your best to understand people's perspectives and give them credit for doing their best to figure things out, even if you disagree. On to the second point. Jordan is constantly telling stories and sharing interesting tidbits to keep his listeners' attention, and he flows quickly between a lot of different things. These next clips are all just taken from a span of about 3 minutes.
If you're competent at fighting, that actually decreases the probability that you're going to have to fight, because when someone pushes you, you'll be able to respond with confidence, and that's partly why Jung believed that it was necessary for people to integrate their shadow. When you study Nazi Germany, for example, or you study the Soviet Union, particularly under Stalin, and you're asking yourself, well, what are these perpetrators like? Forget about the victims. Let's talk about the perpetrators. The answer is they're just like you. It's a matter of facing the thing you least want to face. And everyone has that there's this old story in King Arthur where the knights go off to look for the Holy Grail.
That's 5 different topics all in the span of just a few minutes, and you'll notice that they're all of interest to the listener. First, you have that interesting fact about martial arts, then he takes it to a larger historical context, which everyone kind of understands, and then, most importantly, he shows you how it applies to your life. 2 main points here. First is that windy nature of his speech, which keeps people on their toes and interested. Now, you may have experienced someone who does this poorly, talking about every random thing that comes into their mind and completely losing your attention. Peterson's approach works because he is constantly relating everything back to you, the listener. Now, this focus on making things relevant to you is also the reason that he switches to the second person in so many of his stories.
You don't identify with either of those. You know that they're both necessary. You know that you have to live with both of them, but you identify with the capacity to continually transcend what you are.
So far, these are pretty common charisma traits, and you might have seen these before in some of our other breakdowns. But there is one that is, at least on our channel, completely unique to Jordan, and it's kind of his calling card. That is his use of archetypes. The basic idea of an archetype is that it's an idea that resonates across a wide swath of humanity despite differing conditions. It's kind of like a foundational human story. So it's something that we intuitively understand, remember, and move towards. Archetypes are often encapsulated in fairy tales and some of the most popular stories of our age, which is why you're going to hear Peterson reference them all the time.
That's the witch in Hansel and Gretel who fattens up the kids and eats them. How many of you have seen Disney's Sleeping Beauty? It's very difficult to understand Jung outside of a narrative context. And so I'm going to walk you through The Lion King today. The woman encounters this mysterious and aggressive male and tames him. That's the female hero myth, as far as I can tell. It's Beauty and the Beast.
The point of using archetypal stories, aside from being a fun way to reference Disney movies, is that they connect with people on a deep level. They intuitively feel true. And if you could relate a point that you're trying to make to an archetypal story, you are going to be more persuasive. That's actually how Peterson is able to take the unappealing advice of clean up your own room and make it into a piece of advice that probably thousands of people have applied. Now, for those of you unfamiliar with his work, clean up your room is meant literally, but also to say that you need to clean up your own mess before you go telling other people all the things that they need to fix for you. It's really not appealing advice on the face of it, which is why so many of us ignored our mothers when they told us to do it. But here's how Peterson leads into this advice.
You probably have all watched Pinocchio, and Pinocchio is about how a marionette, someone whose strings are being pulled by forces beyond his comprehension. That's the situation of the undeveloped individual. Geppetto, who's a benevolent father, so a benevolent symbol of benevolent culture, makes a puppet, his son, and then wishes on a star. Now, a star is something that glitters up in the sky, and it's associated with the transcendent.
I can't grab all of this in one clip, and that's kind of the point. If Peterson had just told people, focus on yourself first, clean up your room before you tell other people how to live, well, he'd have been about as effective as a motivational poster. But in couching this advice inside of an archetypal story, he makes it truly connect and actually changes people's lives. That's why I think the ability to tell a good story is the most underrated charismatic trait. If you can build the story in an archetypal structure, that's even better. Now, this is a big topic and one that I spent probably over an hour on in Charisma University course, but for now, I'm just going to link to a few storytelling videos that we've done in the description below if you want more on this. I do want to touch on one more point though, and that's that Peterson can win respect without being a bully because he encourages dialogue. Now, one of the first clips that put him on the map and his most viewed to this date was a heated argument, and throughout this clip, he calms students down when they start getting in shouting matches with one another.
Because they are not being integrated into society. We are not looking for special treatment. We are looking to be able to integrate ourselves into society. And if you refuse to,
He also pays careful attention to the students who do engage him without screaming.
People like me are not seeing you because they see an avenue in what you're saying to do what they want, even if that's not what you meant. They see an avenue in your
Add all this up, and what you realize is that perhaps the biggest thing you can learn from Dr. Peterson is that if you want people to respect you, and you don't want to do it in a domineering way, you have to consider the other person. You consider their reality, and you pace it in your speech. You consider their attention span, and you wrap your points in engaging stories. And you consider that they may have something to teach you, so you speak with them rather than shout at them. Now, we focused a lot on respect in this video, but that's actually just one out of 4 emotions that are going to create an amazing first impression on anyone cross-culturally. Now, if you're curious what the other 3 emotions that you want to create in that person are to make an amazing first impression, I made a video on that breaks down what those 4 emotions are so that you can start using them today to consistently make killer first impressions. If you want to see those, go ahead and click the link in the description, drop your email in the box, and you will get access to that video. Also, as we've grown, it has been harder and harder for me to respond to all the YouTube comments that we get, but I do have a solution now, and that is that for the first hour after I upload a new video, I'm going to be responding to your comments. So feel free to write in if you're watching this, or if you want to catch me next time, go ahead, click subscribe, and then click that notification bell so that you get an announcement as soon as the video goes up, and you can write me in the comments. That way we can converse and dialogue. Woohoo! So anyways, I hope that you enjoyed this video, and I look forward to seeing you in the next one.
No offense, but if you still think stocks, real estate, or crypto are the best passive income investments in today's economy, I'm sorry, but you got it wrong. There's a little known trend attracting millions of dollars a day right now called Audible uploads. Audible, owned by Amazon, is one of the biggest sources of audiobooks and podcasts in the world. And Audible uploads can generate ongoing income with significant growth potential. In fact, they're one of the best ways for everyday people to start an extra income stream in their spare time.
I do this on a part-time basis, about 5 to 10 hours a week. I earn about $40,000 a year. There's no other job that pays with that little time.
I'm at just about $1,500 for this month, and that's only with one book. And it was a book I wasn't even going to publish.
So you want to know how you can get started with Audible uploads too? Well, give me 60 seconds and I'll show you. Hey. My name's Amy Sanderson, and my friends the Mickelson twins here became multimillionaires in their 20s, not by winning the lottery, but by taking advantage of Audible uploads. And since then, they've generated over $100 million online, been named the 19th fastest growing company in America by Inc.com, and most importantly, helped tens of thousands of others learn about Audible uploads too, myself included. For a limited time, they're sharing how you can take advantage of this little-known Audible secret to create more freedom in your life with their short, free video training that covers their one upload method. And you can access the video instantly by clicking the link below and entering on the next page. Now, I don't know how long they'll keep this up for, but for now, it's completely free. And I promise it's the most eye-opening video you'll ever see on how possible it is to get Audible uploads working for you, in much less time than any online business